Good morning, everybody. Welcome back to another episode of the Market Open. Your boy is not late. 8:45 a.m. I am here on the dot. Thank you, everybody, for being here. We got a lot to talk about, a lot to get into. Over the past 24 hours, we have a variety of different headlines that have hit the markets that we will be taking a look at. Pre-markets are relatively green. You got a couple names that just flipped red. S&P 500 right back at that 680 level that we've been hoping it can maintain. Did fall below it yesterday. Yesterday was actually kind of an ugly day in different respects, but towards the end of the night, really when the futures opened, you started to see a lot more buyers stepping in, and you had a couple catalysts last night that also accelerated some of the gains in tech. Tesla, it was obviously a really good day for yesterday. Tesla right here is down in the pre-markets, did close at 489, touched 493. We're going to see if Tesla has a shot to be able to close above 490 today for the first time in history. 488.54 was the all-time high back on December 17th, 2024. And we are once again now on December 17th, 2024, basically at all-time highs just above that level. So pre-markets, we're down. Makes sense. We were up 3% yesterday, but today, throughout the entire day, we also have Micron earnings today after the bell. That's important. Micron up 1.72%. We're going to really see if Tesla can hold on to these gains. And 493 was $7 away from 500. Is 500 in the cards before the end of the year for Tesla to get some of that momentum? Oracle, you're getting a headline right here, which is why you're seeing that 2% candle. Oracle's largest data center partner, Blue Owl Capital. We've talked about Blue Owl a couple times, especially with their debt financing deals in relationship to Meta, will not back a $10 billion deal for its next facility. This is as per the Financial Times. Blackstone is stepping in as a financial partner, and that is your headline right there on Oracle. This headline actually came out like 5 minutes ago. So to be honest, this could be one of those headlines that defines the AI trade this market. And the reason it could be defining the AI trade simply because of the idea that, again, more people are a bit afraid of Oracle. I would be surprised if CoreWeave's not down right now. CoreWeave just went flat. It was up a little bit. CoreWeave 69.59. Nebius right there actually going green, and Iren, which took a beating yesterday, that one as well also green. So, we'll see if this headline has any meaningful impact on Oracle, but again, more debt financing concerns around if companies are going to be able to backstop their debt. Obviously, Blue Owl, if this headline is true from the Financial Times, might not want to be on the hook to deal with Oracle's debt leasing, but there's other people that are going to come in, and the question is, does the market interpret that as bullish or bearish? But that is your headline right there on Oracle as we get into it. Now, Oracle has $150 billion in leases for data centers. So, there's definitely going to be some vendors that probably don't want to finance all of it. Blue Owl also, one could argue, is over leveraged. We talked about the relationship with Meta last week. Meta is basically giving up all the risk. Blue Owl is taking all the risk, and Blue Owl is just assuming Meta is going to be good for it. But if Meta ever walks away from the agreement and says, we don't want to do data centers anymore, we don't need all this CapEx, Blue Owl is the one that gets screwed, not Meta. So, one could argue that Blue Owl is thinking we already have way too many commitments with these hyperscalers. Maybe let's not, go knee deep in with a company that has their credit default swap spiking for the first time in 40 years. So that might be a simple argument for Blue Owl rejecting this Oracle deal, if that headline is true from the Financial Times. Derek, thank you for the 50 memberships. 50 of you guys just got gifted memberships. Tony, Arthur, Ricky, Jeff, EP Glass, Damian, Gene, Dan, Danny, Pastel. You all just got a gifted membership courtesy of Mr. Derek Wall, friend of the channel, who I should be seeing in Vegas in January. I think we both will be attending CES. So thank you, Derek, for those 50 gifted. Again, if you get a membership, there's nothing like special that happens because I don't have the time to make paywalled content. Usually when you have membership on a channel, like you have exclusive content, and I'm streaming like 10 hours a day. So there's no time to make like a separate video. And if I do upload a video, it's for everybody. So there's never been anything exclusive, but if you want to support the channel, it's $5 a month. Then you can become a channel member. But your name lights up in the chat. So thank you, Derek, for making 50 people's name light up in the chat. All right, so let's get into it. We got a lot to talk about. Good morning, good morning, good morning. Actually, we haven't done this in a while. We haven't done this in like 3 weeks, to be honest. Before we get started over the headlines, where are you watching from? Where are you watching from. Do you guys see the gray hairs in my beard? This is getting crazy, bro. Like at 28, this is why I was saying I'm old now, dude. Gray hairs, legit gray. Look at this shit. It's like I'm Santa. Like, this is kind of crazy. I think the stock market has aged me. I really do. It's kind of crazy. By the way, I'm going to my dentist today again. So I got to be out of here at like 10:50 because I'm getting the crown on my root canal. So I have a real excuse today. I like legit have to leave at 10:50. Probably at 11, but yeah, we are seeing the dentist once again today. All right, we got Sean from Malaysia. We got Calgary, Alberta. We got Stonks from Minnesota. We got Pascal from the Netherlands. We got Ken from Montana, Faiza from Montreal, Israel, Toronto, Hawaii, Germany, New York. We got Sid from Chicago. We got Thailand. We got Washington, Belgium, Kenya, Southeast Ohio, South Africa. Dude, I love it. It's so cool to see it from across the world. Arkansas, Singapore. Hopefully we attend Singapore and we do a meetup there in July. Houston, ATL, Delaware, NYC, Belgium, Detroit, Florida, London, Kenya, Indiana. By the way, guys, I was talking to a Wall Street Journal reporter yesterday. She, it's so funny. She wanted my thoughts. They're doing this piece on the Dow Jones and like the Dow Jones Industrial Index and like if people even care about it anymore. And it was so funny because she was asking me these questions and I told her the story that when Trump tweeted the stock market hit an all-time high, me and my chat were like, no, it didn't. And then 5 minutes later, some of you guys pointed out, well, wait a second, I think he's talking about the Dow. And she started laughing so hard. And so the point of her article was like really proved true. And I think it's a good story for her article, which is that a lot of new investors don't care about the Dow Jones. Like we look at the S&P. Like if the S&P or the NASDAQ hit all-time highs, we're like, okay, yes, all-time highs. But the Dow Jones, like, ooh, the Dow Jones has been around for hundreds of years. So obviously that's why Trump and people of his age care about it. But it was so funny because it's like none of us really cared about it. But the point is I pitched her on doing an article on the community. And I said, hey, we have this meetup coming up and we have these people across the world. And every morning we, do a stream. And she's like known about the stream, but I actually explained yesterday what happens every morning and every afternoon. And she was like, this is such a cool story. So she's going to pitch it to her editors and maybe they do a piece on the entire community as like an official Wall Street Journal profile. So that would be super cool. And I think it would be awesome for this entire community. So maybe that happens, maybe that doesn't, but I invited her to the meetup and yeah, she'll get to see it live in action in New York if she comes through. We got New Jersey, Zurich, Malaysia, Auckland, Mexico, London, Perth, Australia, South Africa, Tennessee, Minnesota, Dallas. So awesome. So awesome. Thank you, everybody, for being here. We got 2 weeks left of 2025. Hopefully, we can end out this bull market on a strong note. And if we can, then we get ready for 2026. And we'll keep this going. We got Tess from the UK in the house. Tess will be at the meetup, by the way. I think Doug will be at the meetup. We'll have a lot of mods that you guys know in the chat. Matt Money confirmed last night. He'll be at the meetup. Chris, I talked to him last night. He should be at the meetup. Steve will be at the meetup. So New York should be a fun time. Again, I'll put the link in the chat if anyone wants to join, but it should be a fun one for those that show up. Benny will be there, so you guys will get to meet a lot of the mods that are at the meetup as well. All right, so let's get started. A bunch of different headlines we got going on. I think we'll start off with the first thing last night. This actually got a lot of attention last night during the Robinhood event, which we will talk about the Robinhood event, which is Amazon and NVIDIA and Openai. So as per the information, this has also been confirmed by the Financial Times, so I think it is true. I mean, you had a lot of mainstream news networks pick up on this, so if it's not true, I guess we'll find out. But what it seems like is that Amazon is in talks to invest $10 billion in Openai, valuing it over $500 billion. And Openai plans to use Amazon's Trainium AI chips. So NVIDIA initially kind of went down on this news. NVIDIA's a little bit red in the pre-market. Amazon was up, but because it's Amazon, and because as soon as Amazon goes up like 5 cents, Jeff Bezos tells his fancy bankers to make sure they sell as much as possible. That is why Amazon is now barely up, but we're above 224, which is at least somewhat nice to see. Amazon's getting a little bit of a move off this, but I think the real story here is Sam Altman once again continues to find a way to get the hyperscalers deep into his company and tie their success to his success. Now, you might be asking, well, why does Amazon want to invest in OpenAI? Outside of the general like bullish reasons for why OpenAI is growing, and they might become one of the most important AI companies on the planet, and also they're probably going to IPO at $1 trillion. So Amazon knows that they have a double that's waiting for them in a couple of years, kind of guaranteed if all things work out well, is the use of Trainium chips. So now OpenAI has made partnerships with Broadcom to make custom chips, AMD to use their MI450s, NVIDIA obviously for their GPUs, and now Amazon to build on Trainium chips. And the reason Amazon loves it is because if you're building on Trainium chips, you're probably gonna have to buy a ton of AWS compute, which is important. They're gonna be able to sell those chips, so that's another form of revenue for the business, which is also very enticing for Amazon. But for OpenAI, they get to tie Amazon into this web of, hey, we got Oracle, we got AMD, we got NVIDIA, we have Broadcom, we have Google. We have all these companies that are tied to our success. Not like you're going to go out of business if we're not successful, but $10 billion investment is not pennies. I mean, it's Amazon has a lot of cash, but 10 billion, losing that is not a fun thing for shareholders. So Sam Altman gets to make sure that Jassy doesn't want to be incentivized to lose $10 billion. I think it makes sense. Is this bearish for NVIDIA? I really don't think so. You're going to have some pundits say it's bearish for NVIDIA. At the end of the day, the chip market is massive. Goldman Sachs did a study that even if the rest of the players like Marvell, Broadcom, et cetera, get 20% of the market, NVIDIA will continue to get 80% of that market because of their general purpose computing. At the intersection of how many companies need a GPU that is able to actually get the job done versus a very custom solution. Those custom solutions are good for custom problems. But NVIDIA, with CUDA, the open architecture, and the actual developer ecosystem building on top of CUDA, is selling something that's simply much more vast. And I think at this point, you either believe that or don't. I've listened to Jensen speak about this like at least 7 or 8 times in the past year, including on the last earnings call. And so I don't think it's bearish NVIDIA. It might be framed as bearish NVIDIA, but it feels more bullish the entire AI sector. Now, the bearish argument for this, which you got to give the bear side to this as well. Derek, thank you for the $200 super chat. We'll talk about Robinhood in a second, because that was a pretty exciting event last night. So we'll get into what happened with Hoodie. I think Derek did buy some more Hood like 2 days ago on the dip to 112. So he got that dip. The bearish argument is Amazon is giving them 10 billion, and then OpenAI is spending the 10 billion on the chips from Amazon. So this whole circular financing argument, I mean, look, you can't deny it here. It's kind of obvious, right? Amazon's going to give them 10 billion. And then OpenAI is going to use Amazon's Trainium chips. Obviously, that money is probably going to come back to Amazon in some form or another, even if it's not directly in the same explicit way that they gave the money. And the question you have to ask yourself right now is not, is this circular? Because I think that premise doesn't even make sense. Like, obviously, this is circular in some fashion. But is there an ROI that OpenAI can get on these chips in a meaningful way so that the 10 billion they get and then the 10 billion they pay will eventually make them 100 billion in the future? And I don't know if the answer to that question is yes or no. None of us know the answer to that question. Anthropic had the same deal with Google, by the way. They spent a bunch on TPUs. Google is one of the biggest investors in Anthropic. So is Amazon, by the way. They're a massive investor in Anthropic. So it's not like OpenAI is the only one doing this, but this is the nature of how we're seeing the deal financing go. By the way, ChatGPT released a new image model yesterday. This is their competitor to Nano Banana at a broader level. They're calling it GPT Image 1.5. And a lot of these custom chips from Amazon or Google and the overall NVIDIA GPUs or AMD GPUs, right now, a lot of these use cases seem a bit silly because they're just making pictures that are AI generated. Obviously, I think the use cases will become much more advanced, but this is where the growth is coming from the consumer side. OpenAI has a vastly stronger consumer business than enterprise business, and that's why they're doubling down on the image generation stuff. So that's what you got going on. Yes, there is a bearish take to this. I think there's also a bullish argument that Amazon, at the end of the day, knows that they need to have an avenue of growth. Their chip business needs to grow. OpenAI is a massive partner that they can work with. Also, we're forgetting OpenAI partnered with AWS for a $38 billion deal. These numbers are just crazy because we're throwing them around and the street doesn't even believe in any of them, especially the Oracle $300 billion deal with OpenAI. But Amazon and OpenAI have already had a relatively strong relationship for the past year. So it seems like this is just an extension of that relationship as it is going forward. So that's what we got on Amazon. Yes, there is an Oracle headline for those that are just joining. Blue Owl is rejecting working on one of Oracle's $10 billion data centers. That is why that stock is down 1%. It was down about 3%. Blackstone is coming in instead to take advantage of that financing. I think it's more about Blue Owl not wanting to get over leveraged versus rejecting Oracle's data centers. It could be that, hey, they just don't trust Oracle anymore, although they have a lot of other deals with Oracle. I think it's more so Blue Owl saying, dude, we put a lot of money into this data center stuff. We kind of need to let it play out. We can't keep accepting more deals. And so you have other private equity firms that are jumping in to take the load off their shoulders. So we'll see if that headline has any real, A, truth to it, but B, like implications. But that is the headline of this morning, and that's why Oracle is down. Okay, Hoodie. Let's talk about Hoodie. So Hood had an event last night. It's at 121.74, up about 2% right here in the pre-markets. Hood tends to get a bounce on these events, especially because they announce really important products. And we'll see if this bounce can hold on Robinhood. 121.71. That's up 2%. It was at 135 a couple weeks ago, so did have a nasty fall back to 112. If it can hold this 120 to 125 level by end of year, I'd be pretty happy. What happened with the Hood event? Look, I thought it was a good event. At the end of the day, it was a little bit more of an event that didn't have a ton of excitement. And I think the reason for that is because it was probably supposed to be an online event and then transitioned into being like this in-person event. It was 37 minutes. It didn't have the Hood Summit feel, multiple keynote speakers and all that stuff. It was just them introducing a couple new products. And so I don't think it was meant to be this massive, massive big event. One of the products, unfortunately, was something people really hate, which is prediction markets. And I'm not even here to debate it. At the end of the day, you like it, you hate it. It is what it is. Like, I just don't care anymore. If you really hate the argument around prediction markets, then you hate it and you can choose to not use it. If you really like it, well, they introduced a lot of products that are going to probably double and triple the volume over the next year on prediction markets. And the reason for that is because they essentially showed brand new features on the desktop, which I've been waiting for in particular. They've shown new things with player combos, which essentially are like parlays. And they've shown a new UI that allows you to essentially trade on a variety of different outcomes and put them not only together, but then use AI to predict the different versions of those outcomes with their Cortex stuff, which we'll talk about. So they kind of made an integrated suite of products. And those integrated suite of products is what's got the market a bit more excited about that. Truist initiated coverage yesterday on Robinhood at $155. Most of the analyst reports I've read over the past couple of months are pretty excited about prediction markets, just purely from a business perspective. It's adding another $200-300 million in revenue per year. That could be $2-3 billion in a couple of years. And so as a result, like whether you like it or not, it is a business that's growing. At the end of the day, Hood is an exchange. They allow people to trade crypto. They allow people to trade options. And so they'll allow people to trade prediction markets. If you don't want to trade it, you don't trade it. But they're definitely leaning in and building more features to get those users more excited about prediction markets in and of itself. So whether you think it's gambling, whether you don't, at the end of the day, they are an exchange. You can argue that 0DTEs are gambling. Hood allows you to do it. Schwab allows you to do it. Fidelity allows you to do it. So these products will be designed and they will be catered towards an audience that cares about them. And Hood has a very big opportunity right here. So that was a big deal. And then Cortex. So we know that's their AI suite of products. They introduced a lot of different ways that you can essentially talk to your portfolio. Imagine ChatGPT, but understanding the contextual nature of your portfolio. And then as a result of understanding your portfolio, it's able to give you better insights, better data, almost like robo-advising, but more specific, hyper-specific to what you're doing. And you can then use it for things like technical analysis. So you can say, hey, tell me what's the best spot underneath the 200-day moving average where you think there's plenty of support from a volume perspective to actually be able to take a position into Microsoft. And it will actually, and you can just, say this, you don't even have to type this, and it will analyze and then give you some answers. Obviously, there's tools like this that already exist, but a lot of them are not connected to the contextual. I mean, there are so many times I take screenshots of different things I'm doing on Robinhood and I put it into ChatGPT and I'm like, hey, like if I do this, what do you think is the risk or the upside to this? And it'll like analyze the screenshot and then try to give me an answer. And sometimes it like misses parts of the screenshot. So this is something I would use on a daily basis because there's always questions I have about different things on how to navigate the portfolio. So I think it's bullish. I think it makes more sense. It's going to drive more user adoption. And as a result, it should be something that is a lot more productive for Robinhood going into the end of the year. So makes sense. Obviously, Hood is still tied to a lot of the volatility on crypto and Bitcoin is up in the pre-markets right now. Bitcoin right there, 87.6. So I think that's going to be more defining for Hood, but there are a lot of products in the suite, and those are the products that should be driving the majority of growth, not to mention banking going into next year, which should be very exciting. You do have social coming next week as well. And social is going to be a really important thing. Or not next week, next year. And so that could be intertwined with all the other stuff they're doing. So that's the update on Hood. Grab, quick update. So Indonesia, they had their shareholder meeting. It's about 8 p.m. in Indonesia right now. And they essentially did what we've been looking for them to do. So again, the quick summary right here is that the initial CEO of GoTo Group, which is Grab's biggest competitor, was ousted by SoftBank. SoftBank has a position in Grab and GoTo, and SoftBank has been pressuring to have a merger of both because Grab stock has been significantly better than GoTo stock. GoTo is like down significantly for the past couple of years. Grab is at least up about 40-50%. And Grab is the more dominant player. Over the meeting that happened last night, it is official that investors have voted out the previous CEO, which was against the Grab GoTo merger, and they have appointed the newest CEO with immediate effect on Wednesday, December 17th. The management change comes as investors increasingly push the company to pursue strategic options, including a potential merger with Grab to unlock value and accelerate profitability. So the core thing that needed to happen has officially happened. The question is, when does the merger happen? And that is anybody's guess. But the implication of this happening was really important to get that GoTo merger officially confirmed. Now, is the stock price going to react to that? I don't know. At this point, there's not much I can do on this. If your biggest concern every day is the stock price being flat, it is what it is. I was actually talking about this with Chris yesterday because he's dealing with this with a VG. And I think it's really important to make this argument. The problem with the past 3 years in the bull market is that it has fundamentally conditioned all of us as retail investors to want dopamine and quick hits. And I am guilty of this as well, right? Although Hood and Palantir took about a year and a half, Palantir almost 2 years to play out, and those were stuck for years, which I have a little bit of experience of sitting on dead money before it actually becomes real money. When they hit really quick. They went from 20 to 30 to 40 to 50 to 60, very quickly. So it was stuck in single digits for years. And then the hits were almost every other week you would be getting a new all-time high. And that's not just Robinhood and Palantir. That's a lot of different stocks in the ecosystem of the past 3-year bull market. That's not normal. That's not how the market works. We know that's not how the market works, but we've been so privileged over the past 3 years to just keep getting those quick hits. And so whether it's a VG or a Grab, if you actually have a long-term thesis, and that thesis needs time to play out, and quite frankly, the thesis might be playing out, but the stock's not reflecting the thesis, there is not much you can do in terms of complaining other than fundamentally selling and saying, look, I'd rather be in something like Nebius, which goes up $20 a day or down $20 a day. But then the question is, do you want to deal with that volatility? And do you fundamentally feel that being in something as volatile is better than an opportunity where you think you have a fundamental thesis, even if the market is not reflecting it? So I think the core problem with the bull market is that everyone's expecting a quick hit. And if the stock doesn't move, and there are many times stocks may not move for years. We've experienced this all with Hood, Palantir, Rocket Lab, and SoFi. These are massive retail names that were stuck for years, but then they moved. And so there's not much I can say about the stock at this point because I don't have an answer for why. Maybe short sellers are increasing. Maybe you have general manipulation from market makers that are trying to suppress the price to be able to get it at a better deal before that merger actually gets. I mean, there's all these technical reasons, but at its core, if the stock price is depressed, the stock price is depressed. Only thing I can answer is the fundamentals. And I think the same thing Matt and Chris have said for VG, which they really do believe in the company. They think it's deeply undervalued here. Same thing with Next Decade, but they also can't control the stock. And a lot of times when you get into a crazy volatile name, when it's running up and you're FOMOing, like in Iran, it's not to pick on Iran because a lot of names have dealt with this. You get a drop from 80 to 40 and it's not fun. Right. So and I think part of the reason a lot of people ended up back holding that or Nebius, chasing it at 140 is you're so intertwined in this idea of a quick hit that we forget a lot of this stuff is not realistic many times. And so I just think from that perspective, you have to know what you own. And if you don't know what you own, you can't complain about owning it if the stock's not moving, because at that point, you're going to drive yourself crazy. You should just sell. You should get into something that you know better and that maybe has a better chance. Like Amazon. I mean, a lot of us are sitting on dead money on Amazon, but I sleep like a baby at night with Amazon because I know what I own with Amazon. So I just don't care. People can say whatever they want. It doesn't matter. But it hasn't returned this year. So it's yeah, you're not going to be able to flex your gains, but you're also going to be able to not necessarily cry about it if you actually have a broader thesis of why you own the stock. And so I think that's one thing that all of us are going to have to get ready for going into the next couple of years if we don't have this massive, crazy bull market, 20% year-over-year gains. If it's a little bit more subdued, which most of the analysts on Wall Street are calling for about 5 to 10% next year, maybe all these stocks do not make this massive quick hit. So that's the updates that we have on Grab, Robinhood, Amazon and OpenAI. Let's talk about Netflix and Warner Brothers, because this is also a pretty big one. Again, we have that Oracle headline around data centers. Oracle right here down 1.5%. I think Oracle responded to a couple things, so I'll pull up those headlines in a second. But Netflix looks like they're getting the deal. Here's the co-CEO on why they're going with, here's the Netflix co-CEO on why the Warner Brothers company picked them over Paramount. It looks like Paramount has been completely rejected, and this is Netflix bid now to lose.
Have you with us this morning? Thank you.
Good to be here.
Love to start with antitrust, because it has been one of the key risks seen for both your deal and potentially as well for the Paramount deal. In its communications this morning, the Warner Brothers board says, despite media statements to the contrary, they don't think there's a material difference in regulatory risk between the two deals. How do you see it for Netflix as the path to getting approval here, given so many people seem to have objections to putting together the number 1 and number 3 streamer in both Netflix and HBO?
Yeah, we believe the regulatory process will ultimately conclude based on the facts, and we feel those facts really support the approval of the deal. We're confident regulators will ultimately see this as pro-consumer, pro-creator, pro-worker, pro-growth, pro-innovation, and pro-competition. You came up with a few examples of how you might define the market. We look at the market definition in a couple different ways. A key one for our side is just who's winning TV view share, and I think if you look at that, we're way low in the rankings. We're 6th behind Google and YouTube, behind Disney, behind Comcast, NBC, Fox, Paramount. Even when we put, HBO Max and HBO on top of the Netflix viewing, that still puts us behind YouTube and Disney. So we believe there's a really good story as to why this is a deal that's good for consumers at the end of the day. It doesn't creators in any way, and we're already engaged with competition authorities, including DOJ and EU Commission, to explain that to them.
You are. So you've already begun that engagement. Can you describe at all what you're seeing there, and or what is giving you perhaps confidence that you can in fact meet any objections they may have?
Well, I think it's just, helping them, with the facts essentially around what's happening. And I think, we mentioned the view share on TV. Another way to look at this is I've heard people talk about combining the number of subscribers. I think it's important to understand that, the two services are highly complementary.
It looks like they might keep the two services alive versus combine them all under Netflix, which probably would be better for consumers since they wouldn't have to leave what they're already used to. But the point is Netflix is going to win this. I mean, if Trump gives the approval, which I guess he's the last person to officially make the approval go through, Netflix right there, you got 1.5% of a move. Street obviously likes this right now. They're going to get a treasure trove of content, and they're likely going to get it in the face of shareholders rejecting the Paramount bid for a variety of reasons, but one of the reasons simply might be that shareholders, outside of getting all cash, want to be selling to a organization that they know they can sell in a meaning that they can actually provide the liquidity for and backstop it in a way that's not going to be interrupted. So it looks like Netflix is going to get it. I don't know if that necessarily means the stock's going back to 130, which was at the all-time highs, but 95 in the pre-markets as Netflix is getting Warner Brothers, and they're going to be paying $82 billion for it. He also mentioned in that interview that it's going to take about 12 to 18 months to get this approved, so that might be an overhang on the stock as well. But even if Netflix is dead money next year, if they end up getting this acquisition done, it should be pretty accretive to shareholders. Data center update. So we'll talk about Oracle in a second, but Hut 8 Mining got a deal this morning as well. Hut 8 secures $7 billion lease from Google for AI data center, emphasizing long-term revenue amid hyperscaler shift towards power-first compute. Hut 8 Mining is another one of those Bitcoin miners that didn't end up really, making a ton of money as a Bitcoin miner, and they pivoted towards AI HPC. That stock is up 18% in the pre-market as they're getting backstopped by Google to be able to build out more data centers. So the data center headlines continue to be pretty strong. They're not going anywhere. Either all these data centers are fake and they're all a pure bubble, or Google now has backstopped Cypher, Wolf, and now Hut. So you have multiple of these Bitcoin miners turned data center plays that Google is backing, because Google at the end of the day probably doesn't want to take some of the risk, and they'd rather just give the money to these smaller players. For Google, the money, a couple billion here, a couple billion there, is not that expensive. And they get to get more compute, and they need more compute. So Yeah, every time we see a bad data center headline that at the end of the day is a headline, it's not matching to the reality of what's going on with data centers. Like you're seeing with Oracle this morning, down 2% based on Blue Owl not wanting to work with them. It begs the question, like, is there something deeper to the story, or is demand dead for data centers? And it doesn't seem like demand is necessarily dead for data centers. This is the specific Oracle headline. So Blue Owl Capital will not back a $10 billion deal for Oracle's next data center. The agreement will not go forward after negotiations stalled. Blackstone might be stepping in. Oracle tells the Financial Times, our development partner, Related Digital, selected the best equity partner from a competitive group of options, which in this instance was not Blue Owl. Final negotiations for their equity deal are moving forward on schedule and according to plan. This is an exceptional project that drew significant interest from partners. We evaluated all of our options and selected our equity partner of choice from their unparalleled expertise in the space. So basically, Oracle is trying to say, we didn't break up. They didn't break up with us. We broke up with them. And Blue Owl has not commented on this. But if you want to be bearish here, one could argue that Blue Owl said, no, I'm breaking up with you. Now, I don't think Blue Owl is breaking up with Oracle because they hate Oracle. I think it's just because they have a lot of other deals, AKA with Meta, to the tune of $50 billion that they have to be able to secure. Of course, more business is great, but they also might be trying to actually underwrite in a little bit more of a, let's just call it safe way, given private credit has not underwrote in a safe way for the past couple of years. So the bearish perspective here is that Oracle's debt is so bad, Blue Owl doesn't want to touch it. The bullish perspective is Oracle just wanted a different partner because they didn't find synergies with Blue Owl, which, you know, could be a fair argument. Yeah, Blue Owl could just be stretched thin, which is what's been happening over the past couple of deals over the past couple of months. And, you know, those deals might be a little bit hard for it to take forward. We got Dan Ives on Bloomberg. Let's take a look at what he's saying, and then we will keep going from there. We got the market open in about 12 minutes.
No doubt, but look, when OpenAI calls, you pick up that phone. And I mean, if you look at what that growth's going to look like, I mean, the next few years, you're not seeing the next quarter or two, but in terms of their RPO, we're talking 400 or 500 billion. And obviously OpenAI, 300 billion of that. But to me, it's just one of those where we're going through one of these periods where it's a glass half empty. And I get it. And I think it's healthy for the overall tech trade. But I think when we look out, I mean, I think tech stocks are going to, you know, continue to rip into next year because we're still early days in this AI build out. You only have 3% of US companies that are going down the AI path. And I see it on
it's highly concentrated.
Well, it's concentrated, but now it's spreading. I mean, I see it like authentication, you know, what we see with Orbs in terms of, you know, authentication on that side of the area. You look at cybersecurity, CrowdStrike, you see Palo Alto, you look at other names that are playing it out. I think it spreads to second, third, fourth derivatives that we're going to see play out across tech.
Okay, before I let go of this Oracle story that the FT reported Blue Owl will not back the $10 billion deal for Oracle's next data center, how are you thinking about this reporting? What does it signal to you?
Look, I think there's a better chance of me playing in the NFL this weekend and then this data center ultimately not getting built out. Now, I'm not saying terms, partners, it goes through some negotiations. But my view is like in moments like this, just like DeepSeek moments, just like Liberation Day, just like, you know, US-China worries, I get the bears are going to sort of own the day, especially when it comes to like a name like Oracle, but it's not time you panic. I think Oracle actually here is a compelling name to own, given the risk reward.
All right, let's talk a little bit about the Amazon discussions with OpenAI about letting OpenAI use its Trainium chips, also investing at least $10 billion in OpenAI. Talk about Amazon's role in the whole AI build out.
Sure. I mean, look, Jassy is an AWS guy. So if you think about where we are in terms of this arms race, the Dell and Microsoft clearly at the top. You look at everything that Google's done in terms of Curry and how they've successfully built, you know, especially on the cloud side. And, you know, really, that's been a huge turnaround. But for Amazon, this is a huge opportunity for them on the data center side, given their cloud customers in AWS to go after. I mean, they got to jump in the deep end of the pool. You do with OpenAI. So I think to some extent, even though right now, if you look at the diversion that we're seeing with stocks, you know, tied to OpenAI that are negative, Amazon, they want to be more associated with them because that is really going to be the build out when we talk about this AI revolution and you're still in the third inning. Amazon wants to ultimately, you know, really build this out with a partner like OpenAI, not be on the other side.
I get that, but will the Trainium chips actually be a real competitor to NVIDIA's chips?
See, my view is today, there's only one godfather of AI. He's wearing a black leather jacket. His name's Jensen. So at this point, 12-1 is demand to supply for NVIDIA chips. But the reason AMD, the reason you're going to see other players in, you see Google in terms of what they've done on, from a chip perspective, they'll play in that game. That's a long-term bet. It's no different when Apple bet on chips in terms of they're going to ultimately seed out Intel. It took 5, 6, 7 years. But these are long-term plays in this arm.
Yeah, look, I would agree with that. At the end of the day, a lot of these plays that these companies are going after, whether it's Google TPUs or Amazon Trainium chips, they need to do this because these businesses are massive. I mean, when NVIDIA has a monopoly on chips, Amazon, by the way, or Netflix up 1.7%, Amazon up about 1% pre-markets, then there's going to be competitors that try to inch away at that monopoly. And NVIDIA's had that monopoly for basically the past 5 years. And now you've got these custom ASICs trying to get some market share. Even with that monopoly fading a little bit, NVIDIA still should be the biggest player and a relatively strong player. But it would be stupid for Amazon and Google to not try to go after that market, even if they can get half a percentage point away or even multiple percentage points. Amazon right there at 1.28%. So it makes sense. Now, Google's had the benefit of the TPU headline actually supported stock price. Amazon is not with the Trainium chips. Maybe this is one way to help Amazon and get the narrative to change. Again, the biggest problem with Amazon is their operating margins are just not good at 12%. They're better than 7%, which they were 8 quarters ago, but that thing needs to get up to 20%. And you're going to need a lot of automation to help that. I think robotics is the thesis there. You're going to need AWS to continue to accelerate, which means you're going to need partners like OpenAI to buy that compute. And it makes sense for Amazon to ultimately get into that game. So you got Amazon right there up 1.2%. Google's up 0.3%. NVIDIA slightly down. We'll see if that reverses. NVIDIA, Jason made a really good point yesterday on Technical Tuesday. NVIDIA has now traded in its tightest range. And if it stays in this 175 to 178 level today, it would be a 3-day range stuck within a couple dollars. It's been like a year since NVIDIA has been that tight. Even in 2024, when NVIDIA was kind of just going back and forth, you would still get more movement every day. Like for the past couple of days, it's really just been stuck, which I don't know. I feel like that's more of an accumulation zone versus anything, unless they're ready to take NVIDIA back down to 150, which if we get a market correction, sure, that could happen. Maybe we don't get a run to 200 by end of year, but it definitely feels like a safer place to at least develop more of a position if you believe it's cheap here, which again, at 24 times earnings, it does feel a bit more cheap there. So that's what you have on NVIDIA, OpenAI, and Amazon. Trump yesterday, I don't know if we're going to war with Venezuela, but based on this tweet, it definitely looks like relationships are not the best with Venezuela. This is a 2026 geopolitical headline that we cannot forget about if this starts to intensify in a more meaningful way. The summary of what he said is that Venezuela is now encircled by the largest naval force assembled in the region. Military presence around Venezuela will continue to expand in order to blockade sanctioned oil tankers operating in Venezuela is now live. And the United States is demanding that Venezuela return oil, land, and other assets that it has seized. Oil prices right now in the pre-market up a little bit, 1.39%, still well below 60, which has been really good for inflation. I think Trump would like to keep it that way. But we talked about in the morning yesterday that there were like 50 senators that were inside of this like closed meeting around Venezuela. And it looks like it's because you were going to get this Trump tweet about the Maduro regime later in the day that basically said, yeah, we are not messing around anymore with Venezuela. So I have no clue, quite frankly, if this means we are officially starting something much more serious. You're not seeing that much media reporting about it. So it's still one of those things that's going under the radar because I guess it hasn't elevated to the, I mean, obviously we've seen the strikes and there's been a lot of controversy around that, but it's not been to the point where everyone's like, oh, like this is Russia, Ukraine or something like that. Maybe that's a 2026 risk we have to watch out for. But if not, then, hopefully that doesn't affect markets too deeply or that doesn't become something that aggressive from a geopolitical perspective, but it's definitely something that has to be on the list. Polymarket already has odds of war. Of course they do. Of course they do. Of course. Why wouldn't they? Let's see. Polymarket, Venezuela, odds of war. 8% chance the U.S. will officially declare war on Venezuela by June 30th, 2026. And there's a 3% chance they do it by December 31st. Yeah, I don't know if they would legit declare war. I mean, Trump might not want to do that because he's supposed to be the anti-war president. but the actions might be potentially like there was a war. So that's what we have on Venezuela, and we'll see if it affects the broader markets as we get into the next coming years. 5 minutes until the market opens, Trump started interviewing Waller yesterday as a Fed chair. So Hassett was on the list, then Warsh really came on the list, then Waller started getting the interview. And I think the reason for that is because the bond market is trying to say we need someone who we can trust. And Hassett and Warsh are not necessarily people that we can explicitly trust. Fed's Waller this morning said 2026 could turn out to be a better year for the economy. Hope that helps the job market. And he says there's going to be a reacceleration or there's not going to be a reacceleration in inflation above the target, but it should come down over the next few months. Here's a couple minutes on what he had to say this morning. He is now with a 15% chance in prediction markets to potentially become the next Fed chair.
Talking to CEOs around the country and other sources of soft data that told me the labor market wasn't doing that well. People were kind of like, what's he talking about? And then the August 1st, the July jobs report came out. Everything was revised down pretty dramatically. And so we've now come around to this view that the labor market is very soft. The jobs numbers are around 50 to 60,000 the last couple months on average. We know that that's too high, and those are more likely to get revised down when we get the unemployment insurance administrative data later. It'll take a while before we get that. But board staff is estimating take off another 50 or 60,000 jobs. So we're close to zero job growth. Now that's not a healthy labor market. Now we expect that to kind of come back in 2026 due to a lot of tariff uncertainty going away. Our rate cuts have helped try to soften things up going forward. That was the whole point of doing these preemptive rate cuts that we started in September. And then also a lot of the fiscal bill will probably have some impact. And then, we'll see if the AI stuff really starts kicking in with serious measurable productivity. So 2026 could turn out to be a better year in terms of that. Now, whether that pulls the labor market along with it, I certainly hope it does. But right now, my focus as a governor has just been to focus on the labor market. Inflation, I'm not particularly worried about. I know it's above target, but I believe it's coming. It'll start coming down the next 3 to 4 months. And so the critical thing for me is the employment leg of our dual mandate, and inflation will come back down. And we see that when you look at market pricing, inflation expectations, tips, and things like this. It's pretty well anchored around 2%.
Chris, sounds like what Trump is looking for. I care more about the labor market than I do about inflation, and he has the appeal of being the Fed chair, which, I mean, who knows? Maybe Waller ends up being the guy over Warsh and Hassett. The problem with Hassett is, again, he's just viewed as too politically loyal to the president. And regardless of what Trump wants, by the way, I put the green or red poll in the chat today so people can vote on if we end up going green or red. Regardless of what Trump wants, if the bond market starts screaming, and the 10-year right here is 4.16 up a little bit, that we are just not happy with the person that you picked. Like, we cannot afford this 10-year getting anywhere near where we had in 2024, 2025, early January, which is like almost at 4.9%. I mean, the cost to refinance the debt is just going to be horrendous. So, like, we need this thing to come down. Rates are coming down, but the yields aren't necessarily coming down. The yields are basically where they were last week. Mortgage rates are not going to come down if yields don't come down on the 10-year, which means there might be a deeper concern about inflation, although those concerns seem a bit more subdued. But if there's a concern about independence of the Fed, because you have Hassett there versus like Waller or Warsh, then that could be a bigger issue as well. By the way, although we lowered rates, there's a reason why gold and silver are running. Silver hit a new all-time high yesterday at 66. That's 65 right here, still up 3%. And then gold is basically close to all-time highs. Part of that reason is still concerns about inflation and, if cutting rates is the right idea, which, again, I think objectively, given the labor market data we saw yesterday and over the past couple of weeks, cutting rates makes sense, but you're going to have the hedge with gold and silver. And those two continue to be just fantastic assets that are performing very, very well. Now, could they be getting a little bubbly if everyone starts piling into them? Maybe, or maybe next year they just continue their momentum. But these are part of the commodity trade that's trying to counteract any pain that the market might be thinking around inflation, labor market, etc. All right, here we go, folks. Thank you, everybody, for being here. I think let's have all eyes on Tesla and see if we can maintain some of the momentum from yesterday, Wednesday, December 17th, 9:30 a.m. The stock market is now open. All right, wake your ass up. Let's get into it. Tesla right there, 490 on the day. This is going to be a big day for Tesla to see if she can hold that 490 level. Obviously, we hit 488 on December 17th, 2024. A year later, quite poetic that Tesla went through the ups and downs of going all the way to 210. Look at that, 491 breaking through. And now she's right back to where she was at all-time highs. 500 is what a lot of people are looking for. It would be kind of crazy to see that 5 in front of Tesla, but let's see today. Maybe there's a shot. It gets there. 490 right there on Tesla. NVIDIA goes down. Amazon goes up. All right, so the NVIDIA headline, market's not happy about the Trainium chips. Again, we talked about that during the beginning of the show. Markets probably would interpret that as bad. I don't think it's bad at all. I think, again, the markets interpret all these headlines as bearish NVIDIA because they hate NVIDIA. But that Amazon Trainium OpenAI news, you're getting an initial dump as soon as the market is open right here, 174.95. We did see NVIDIA go to 169 a couple weeks ago, right? So it's not crazy to imagine retesting those levels. Amazon at 224, Cypher's up, Netflix is up 95.73, Next Decade is up, VG is up, Nebius 82.97. This was at 78 yesterday. That's green. Bitcoin at 87,000. Robinhood 121.66. That's up 2%. Where is CrowdStrike? That's at 488, basically flat on the day. Nebius 83.51. SoFi 26.71 up from 25.80. Amcor 41.14. That's up 2%. It went to $38 yesterday. Apple at 275. Carvana at 461. Oklo at 85.41. Microsoft 477. ASTS at 69.93. That's up 2.3%. Meta catching a little bit of a bid right here, 657, as that one continues to go green. Goldman Sachs is up. JP Morgan is up. PayPal is up. Ethereum 2,900 is up. Where's Tesla? We are 490. It got to 493 already, then got rejected. I'll check resistance in a second, but it's trying to hold that 490 level. Uber, that's flat. Uber continues to get hit as Tesla goes higher. And it's hard for that one to make some momentum. Dan Ives initiated coverage on D-Wave. So he is getting into the quantum game. I think $35 is his price target. Jeffries also initiated coverage on these guys yesterday. I think their target is 45. So you got D-Wave right there at 26.70. That's up 5% on the day. IONQ as well is up 4.2% as the quantum names continue to maintain their momentum. Netflix, 96. That's up 2%. Netflix is 96 as that's green. Reddit is 229.92. That's up 2.64% as well. And Netflix continues to get some of their momentum based on that deal with Warner Brothers coming through. Tesla right there, 492. She's trying again. Hoodie, do we get 122? Okay, Street seems to like the announcements that they put out yesterday, 122. If we can make a run to 125 and close above it, that would be the best. Tesla, 492. Let me check resistance on Tessie. Lemonade as well, 493 now. Lemonade, yes, Lemonade also up 3% on the day as that one's getting some love. So let me just check 500 resistance. The shares at 500 for Tesla, 650,000. And you got a couple 100,000 before that. 494. It's not impossible. I mean, the volume is already 7 million shares on Tesla. Like, it's Tesla at the end of the day. People could just be buying the breakout and not really care about the stock price here. So, I mean, it's possible. But we're going to have to see. You got about 600,000 shares that are needed to get above that. Pounty right there, 186.70. Pounty goes red. S&P goes green, being led by Tesla. So are the Qs going green. The fact that NVIDIA is down and the S&P is green means you're getting some of the other tech sector leaders to hold up. NVIDIA is still going down, 1.7. So this one continuing to get sold off right there. SMCI, 31.70. Big Bear at 591. Again, Tesla at 493. Robinhood, 121. Amazon, 224 on that OpenAI news. That is green. For Amazon, Rivian, is that one up? That one was down yesterday, right? That one's back up. It was down about 5% yesterday as well. Yeah, Grab and Tesla are the same price, $493. Got the same price on both of them. Microsoft, 477. Tempest, that's up. JP Morgan, that's up. Let's look at the semis. How are the semis doing? Broadcom's red, ASML is red, ON is red, SMCI is up a little bit, AMD and NVIDIA. AMD also going red with NVIDIA. I guess the Amazon news potentially perceived as bearish for NVIDIA, AMD, and Broadcom, which again, it's not, I don't think objectively it's bearish, but the perception, yeah, you could imagine maybe less chip demand for those guys, which is why it's seen as bearish. Dell is down as well. And then Micron, which has earnings today, I have no idea how Micron's going to react to earnings. I will say it is significantly cheaper on a forward basis than Broadcom. However, it has the same issue with Broadcom, which is that it ran up a lot during the year. And if the quarter is not absolutely perfect, I mean, it could take a hit. It could take a meaningful hit just because it's up 170% year to date. But if the quarter is perfect and their earnings multiples are not as crazy as Broadcom's at 420, maybe this one has more upside going into the end of the year. I think it peaked at 260, 264. It's at 234. So maybe a run to that if they have a really good quarter could be what you see. 52-week high on Lemonade. That one continues to get some excitement. There you go, 84.73. This one was, what, $40 a couple months ago? This one has done very, very well. Lemonade year to date is up 132%. Yeah. It's basically $40 in January. Fell all the way to 26 in April. As that one continues to make a move. Hut is up 20% because they signed a lease for what's rumored to be Anthropic to buy data center chips or to buy data center compute for their training. And Google is leasing them $7 billion. So Google backstopping Hut 8 Mining, likely to serve Anthropic as one of their customers. Wow, Google getting hit right here, 302. I haven't seen Google lose 300 in almost 2.5 weeks. I don't know why Google is getting hit right there. NVIDIA continuing to get hit. Is this really on the OpenAI Anthropic or Amazon thing? You would imagine Amazon's up way more if Google and NVIDIA are down. Maybe Google's down because the TPUs are not going to be in that much high demand anymore, which is, again, stupid, but like maybe that's the perception. And then obviously the NVIDIA perception is they're losing to these custom ASICs. But if anything, Google should be green on that. That just means there's less market share for NVIDIA, so more TPUs get sold for Google, even if Amazon has this deal with OpenAI. So I don't know why Google goes red there. NVIDIA also red, and Amazon barely up. I mean, it's up, but it's not really meaningfully up. NVIDIA's down because of the China IPOs. That is fair. There was a couple of there's one China company, if I'm not wrong, that went public today in China. And are they a chip company? They are indeed a chip company. MetaX is the name of the company. MetaX. They are a chip company, and they are up 700% today. That's probably a better explanation for the NVIDIA thing than the OpenAI news, because the OpenAI news is from last night. It's kind of old at this point. Now, here's the funny thing about this. NVIDIA doesn't even sell into China. So it's like, if we're worried about taking away market share, well, unless American companies are going to start buying Chinese chips, where there is a pretty big national security concern, if Google starts importing all these Chinese chips and putting them in their data centers, then NVIDIA can't even take any of this market because they don't have access to the market. So does it really matter that a Chinese chip company is gaining market share in China if NVIDIA can't compete in that market? But that's probably a better reason than not for why this one is down. MetaX is the name of the company, up 700% on the day. Tesla at 492, S&P 679. And the reason it's probably up 7x is because there's so many Chinese investors that have been waiting for their own chip company, their own quote unquote NVIDIA. And that's why they're bidding that company up. Oracle down 2.5%, again on that Blue Owl financing deal. Yeah, MetaX, that's a good point, is run by an ex-NVIDIA vice president. That's a great point. We actually talked about that a couple weeks ago. So yeah, they're basically assuming it as a baby NVIDIA to them. It has X in the name, so it's cooler. That's another reason. And that's why that's up. OpenAI and Anthropic discuss data deals with biotech and other companies. So this headline, which once again is from The Information, how is The Information this plugged in, bro? Like who do they have that's so plugged into the, like, at this point, I just think someone in OpenAI and all these tech companies are just feeding it to The Information. Because it's The Information. We're not talking about Bloomberg or the Wall Street Journal. I think they have a source that's like really good for them. Or maybe they have a hedge fund as a source, and the hedge fund has different sources that are getting the information. But look, OpenAI talked about this at their CFO conference a couple weeks ago. Robinhood high of day 122.30, which is that part of their new business model outside of advertising and subscription is going to be partnering with other companies like biotechs. That was the example they gave to engage in a rev share. So OpenAI would do the research for the drug, and if the drug is successful, OpenAI keeps like 50% of the upside, which is actually a really smart business model, because if you find the cure to some horrible disease and you need a lot of GPUs and compute and training to be able to get to that answer, to find the solution, like the pharmaceutical companies don't take any of the risk of having to buy all the data center compute and all the training and all this. The tech company gets to do the research, but the pharmaceutical company gets to provide the essentially molecules, ingredients, the biotech, all the stuff that's needed to actually come up with a solution. And then boom, you guys share in the upside. I mean, that's not a horrible model. Obviously, the 99% chance of failing is there because it's hard to solve these diseases. But if AI is an accelerant, that 99% should turn into maybe 80% failure, which is significantly better than the current status quo. S&P just turned green as well, 679. So I don't hate that as a business model, and that could be something that really is beneficial for OpenAI as well. Small caps are green, 251. That's up 0.5%. Again, not sure why Google is down. If it's the OpenAI headline, then I think that's a little unwarranted, but that might be the reason. Google down 2%. Or you might be, you might have a really big investor that's just taking some profits before the end of the year. I mean, this is also something that we have to take into account given how many big investors are in this name. Google was the second largest stock that was bought in Q2 of this year. I mean, some of them might be saying, all right, I'm out at 300. And, maybe today is the day they pick, but like outside of a headline, that could just be a profit-taking move. Oracle continues to decline, down 4%. I mean, I would not be surprised if Bill Ackman took profits. Bill Ackman has been selling Google on the way up. Towards the end of the year, he might want to book some gains for his clients, and he might be taking some profits on Google. Tesla goes red, loses all of its gains. It was at 495, now 488.70. Oracle, once again, 4% down. If Oracle loses 180, it's the lowest level this year outside of Liberation Day since the September run up to 350. So that would be definitely a hit on Oracle. Broadcom fought. Wow, Broadcom. Dude, this is lower than the past 3 days. It actually had a rebound yesterday to 345. Maybe that's also why Google's down. If Broadcom's getting hit because of the TPU relationship. Robin is getting hit as well right now. You're seeing red candles across the board. NVIDIA, is that still holding at least 174? That one, 173.79, bottomed at 173.54 so far. Nebius also just lost all of its pre-market gains, 2% down. Iren is at 36. CoreWeave hit below 70 yesterday. CoreWeave, wow. Okay, CoreWeave, something else is going on with CoreWeave. Because this thing has, since November, it's almost been like 1 or 2% a day. And if it ever gets any of it back, in the next day, it's just gone. Which has been the opposite of Nebius and Iren. Those two also haven't been amazing, but CoreWeave's been just like fundamentally hit, where you almost think the thesis has completely changed given the way that it's being re-rated. But this one is getting hurt. Google very close to below 300, and then Broadcom 334 on the day. Reddit is somehow up. S&P is green. Tempest. Where's Rocket Lab? We haven't looked at that. Rocket Lab getting hit as well. Down 2%. Down 2%. Whole market across all sectors just jumped. That is correct. It seems like across every sector, we just got a bit of a dump. Let's see if there's any headline. I don't see anything too crazy. China's foreign minister spoke to Venezuela counterpart. China's foreign minister says China opposes all unilateral bullying behavior. Maybe there's a Venezuela headline. Maybe there's a granted, I don't know. Obviously, China is going to support Venezuela, but I don't know if that's enough to hurt the markets at this moment. SoFi is at 26. SoFi just tanked. MSOS, that's the weed ETF. Trump is likely to make weed a Schedule 3 drug, as was reported this morning through an executive order. So that is pricing that in. BM&R down 2%. Where's Bitcoin? Bitcoin 87,400. That is also down. And with it, Grab also. This is basically the price I started buying at in January. You can't win them all. You cannot win them all. From 650 to 488 in 2 months. It is what it is. I mean, there are some years where those names just do not work. And again, fundamentally, there's not a reason it shouldn't work, but the stock market is many times a lot more about fundamentals. Zeta right there, down about 1%. Service now is up a little bit as well. Robinhood just got a full. Yeah, I mean, again, whenever you see the market getting hit and Robinhood's pumping, you should expect a dump pretty soon. This stock cannot sustain gains unless we are seeing the whole market participate. Unless there's a very specific piece of news that only affects Robinhood. And even then, it's not able to just materially condense that into just, their narrative. Because their narrative is tied to the stock market at the end of the day. And Bitcoin, crypto, etc. So that's why that one reversing makes sense. Micron right there, 234. That is up 1% on the day as we've got earnings as well. All right, so the headlines this morning are the Blue Owl Oracle stuff, which is obviously affecting Oracle and the data center plays. Oracle now 181, and then the Openai Amazon headline, which, of course, is about to send Amazon red, because why not? But that potentially affecting Google and NVIDIA. And if Google and NVIDIA and Broadcom and AMD are affected, then all the other names are affected. Even the quantum names, they were up like 5%. Now they're up 2%. So they're losing some steam. Tesla completely losing its gains. Could see this easily reverse. Netflix at least holding on to 2%. Palantir as well going down. Yeah, a lot of these names getting hit. The Blue Owl news was that they are not going to be financing an Oracle data center. You could say it's bearish because they don't want to deal with Oracle. You could say it's a nothing burger because Oracle found Blackstone to finance it. So they found a different private equity firm. But it is a headline. Oklo as well, down about 1.85%. ETH below 2,900. Okay, crypto's following. ETH 2,890, and then Bitcoin $700 down on this candle. The question is why Blue Owl is backing out. Agreed. That is the question, and obviously the market's perception is because they don't want to work with Oracle. So that could be the sort of bearish point for why they are backing out. This has been every day, right? This is literally, we get like a 5-minute pump and we're like, all right, we're making a trend higher. But again, as I was saying in the morning, we are all spoiled. We had 6 months of green, 6 freaking months. When I mean 6 months of green, I don't just mean like the stock market was up every month. I mean, we did not have a single day of the S&P 500 being down 1% for 6 months. And the first 4 months of the year, the S&P 500 was up 2%, down 3%, up because we had all the tariff stuff. After the Liberation Day pivot, 6 months of not a single 1% move up or down, which is really good because the volatility was just dead, which means stocks had a lot of room to consolidate and mature. Headlines weren't moving things left or right. And ultimately, you ended up with a relatively strong bull market. It's just the last 3 months of the year have been the exact opposite. Tesla now 486. The unfortunate part about it is that a lot of people, and this is not the case for all of us as retail, because a lot of us bought that April dip and we bought the May, June strength, which was significantly lower. I mean, if you bought Tesla at 310, 320, 330, 340, you're sitting at 486, you're not too upset about that. But there is a subsection of the market, retail and institutional, that bought the September, October highs. And that's what pisses you off. Because after 6 months of green, you're like, all right, I'm going to jump in. And then when you jump in, immediately we go through this crazy volatility. It annoys people. But for a lot of us that bought the April dip, if you bought Palantir at 70 or a hood at 30, you just can't be that upset. Nonetheless, it is still annoying for everyone to deal with it constantly. Tesla right there, that's still down. Yeah, the VIX isn't spiking. VIX is below 17. You're not getting some massive spike on that. And then CoreWeave right there, 66.3. That one's down another 5%. I want to change my vote to red. How many of you guys voted green? It was 70% green, and right when I clicked on it, it went down to 65%. This thing happens to change with the market for some reason. For some reason, it changes with the market. Tesla right there, 488. Little bit of a bounce off 486. S&P 678 still down. And then Lemonade loses all of its move as well. this morning. The Dow is green. Well, the Dow Jones, baby. That's the stock market. Again, it was so funny when I was on the phone with that reporter last night. The Wall Street Journal is doing a piece on, is the Dow Jones relevant anymore? Because I think it's like, because they're preparing for when it gets above 50,000, because they're going to do this like big piece on the Dow Jones. They do it every time it hits a new milestone. And I told her, I was like, when Trump tweeted that the stock market at all-time high, all of us were like, what is he talking about? And then we figured out he was talking about the freaking Dow Jones. And again, the reason the Dow is not really indicative of the market to a lot of us is because it's 30 companies. Like, a lot of those companies are not necessarily the companies that at least millennials want to invest in, like Caterpillar and Home Depot, right? Like, we're looking for high growth, we're looking for good margins, and we're looking for long runway and a trajectory of becoming generational companies. And the S&P has those, the NASDAQ has those, the Dow, I mean, they replaced Intel with NVIDIA last year, which was a good move, but outside of that, it's just not that exciting. So it's not the index that gets a lot of people's attention, because a lot of people just aren't invested in a ton of those names. I'm not saying those are bad companies. Caterpillar, Home Depot, I mean, these are relatively strong companies that even if they're growing at less than 5%, you know, they're stable companies. Walmart's literally hitting all-time highs, but they're not the names that get the most coverage, right? And that's why people don't tend to look at the Dow that much. Broadcom, is that one losing 330? Dude, $3 away from losing 3. Did anyone buy this Broadcom dip? I know Steve said he's getting a bit more excited about it. I don't think he bought yet, but he hated those earnings, but even he thinks this decline is getting a bit stupid. Where's Broadcom now year to date? Broadcom was up 80%. Broadcom is now up, wow, 43%. That's a massive move down from that earnings play. Fear and greed's at 51. Yeah, you're not going to see fear and greed tank in any meaningful way unless the S&P, we're still at neutral. You'd need like some real pain for this thing to go a bit higher. Fear and greed right there at 51. Okay, let's talk a little bit about hedging. So in my article for 2026, that should be coming out closer to the beginning of next week. We have the prediction markets, Reddit deep dive, Zeta deep dive, and then another article that should be coming out towards the end of this week. So we have 4 articles coming out this week. So for those that are interested, there'll be a lot of reading to do this week. But I have the 2026 kind of portfolio update ideas that I'm thinking about. I was talking to Jason last night, and he pitched a really good idea on hedging that a lot of you guys that are more experienced in options probably know about. I found out about, I mean, I kind of knew about this, but he really sat down and explained it to me yesterday. Wow, Bitcoin making your move. Why did it just go from 86.5 to 88.7? That's a big candle, bro. That's $2,000 in like 20 seconds. Hood just got a pump with that. Tesla just got a pump with that. Ethereum, yeah, Ethereum 2890 to 2940. Bro, what is this market? This is like, is this thing gonna just like get hit right back down to 86 in the next couple minutes? Goodness gracious. Do you guys see that? Look at the comments right now in the chat. But like 3 minutes ago, it was just annoyed. Now it's like, let's go, run it to the moon, baby. It's like the emotional flip is crazy. Is absolutely freaking crazy. Especially because I don't see a reason for that quick flip on Bitcoin up. But it is crazy. These things determine our emotions so much, which actually gets me into the conversation around hedging. If you feel that your emotional well-being has been affected by the markets to a deeper extent this year, and which I know for myself is definitely the case, and you know, next year I am not trying to be as emotionally tied to the markets. I will always have some level of emotion in the market simply because I'm looking at this all day. But the volatility this year has been insane. And I'm quite frankly, I don't know about you guys, but I'm tired of it. Like I also have gotten to the point where I do not want to have this much volatility in the portfolio. I think it's a function of getting older as well, a function of like trying to preserve the capital you made versus get the capital. There's always a level of volatility you have to go for or go through to get the capital. But once you get it, the number one thing is to not lose it or to not feel like you could lose it. So this is a simple hedging idea that I'll put out there that Jason pitched yesterday that I thought was relatively simple. Let's just use Hood as an example. Let's say you're overweight Hood. You have a lot of hood. This could be the same for NVIDIA or anything that's run up like crazy, Rocket Lab, SoFi, etc. It doesn't necessarily work the same for every stock because you have to see what the options flow look like. But instead of having to sell your hood or your Rocket Lab at this price in January and get the cash, which is also, an easy way to navigate the emotional volatility, you can sell a deep in the money call with a 0.75 to 0.80 delta. So for example, if you were to sell a $100 call on hood, right now they're giving you $40 of premium. That $40 of premium hedges you from 120 minus 40 to $80, which means if hood goes to 80 next year, which would be a pretty significant correction from 120. Google, by the way, very close to losing 300. It did lose it for a second at 299. Now it's back at 300. You would be hedged basically 1-to-1, not literally 1-to-1, but basically 1-to-1, because the delta on those in the money calls are so deep at 0.75, 0.8, which is that if you were to fall to 80, which is the concern, right? If you're in hood, that this thing tanks back to 80, or if you're in Rocket Lab, that thing tanks back to 30, that instead of having to sell the shares, you can collect the premium up front, which also means you don't have to deal with the tax liability anytime soon. And then you're covered until $80, which is not horrible at all. Now, what's the catch? The catch is you're effectively selling your shares at 140, right? Because if you're selling a call at 100, that means you're agreeing to sell 100 shares at $100, which means you have to have those shares covered by the call. And if you're getting $40 of premium, you're essentially selling it for $140, $100 on the stock, $40 on the premium. Stock's at 120, so you have $20 of upside from the current level. If you think 140 is a really cheap price for hood, for example, maybe that's too aggressive of a call. If you think, by the end of next year, I don't know if hood's above 140, then maybe that's a relatively decent scenario. And same thing for, the other stocks that people might be in that they want to hedge with. But your downside is covered to 80. How far out? I'm looking at January 2027. At least that's the one I was looking at last night. So it's a year-long leap for a covered, I should say a year-long covered call. And for a year, you have downside protection almost. So like if hood were to fall to 80 tomorrow, for me, that's $40 of downside on a lot of shares. That would not be fun. Whereas if you sell that call, it's almost like your portfolio doesn't even feel it. You will feel it to an extent. It's not perfectly proportional, but it's definitely going to protect you way better. Now, if you sell like a 150, 160 covered call, you're not going to be protected because the extrinsic value that you get is going to be it's not going to be proportionate enough towards the intrinsic value of the contract because you're still so far out the money. Whereas you have a lot of intrinsic value on the $100 call because it's deeply in the money. And so it doesn't become Bitcoin right there, 89.2. It doesn't become as bad of a hedge as selling a out the money call, which will protect you a little bit because you'll get some premium if the stock falls, but you're not getting the type of premium that's necessary to actually cover it on a delta neutral basis if the stock were to absolutely tank. So the point is, and I'll talk more about this in the article, but I think if you're sitting on heavy gains on a stock, instead of having to sell the stock, because what's the best case scenario in this situation if we get into a really bearish scenario? Let's say hood actually does go to 80 and it stays at 80 for all of 2025, which again, I don't think it's going to happen, but let's just assume the worst case scenario. That means I collected all that premium. And then a year later, I can buy out those calls super cheap and then still keep all my shares. I never had to sell my shares. Whereas if I actually sell my shares, A, I have a capital gains liability, and then B, I might not be able to buy back in. And if I do have to buy back in, I have to time it. In this case, I'm not really timing it. I'm saying I'm okay with selling my shares at 140, or at least whatever percentage of shares you want to get rid of in this example. And my downside is protected to 80, which I do think the downside should be 80 next year at the most. I don't think this thing is going back to 50, 60 bucks. I think a lot of the dip is going to get bought at 90 if it actually gets there. So it is one strategy that I don't think is crazy. And it is a potential way to protect against gains without having to sell your stock. But you have to be okay if hood runs to like 170. It's like, okay, you missed it then. Now you could technically roll it and kind of keep the shares if you really care about it. But you also have to be okay with getting rid of some of those shares at 140, which would be essentially your exit price. If they get called away, that is very possible. You could get exercised on those early. So someone could say, hey, exercise these contracts. And because you're the one who covered them, your shares get called away. That is absolutely a risk. But barring that from happening, you're protected to 80 bucks. So again, you have to be okay with letting those shares. This is not I found a way to keep my shares. It's like, no. Your shares absolutely can get called away. And if the stock runs in 2026 is a 20% year on the S&P, you missed out on a really big run. But you also have the protection of, hedging your downside, which is a personal choice that everyone has to make. SoFi goes green, 2664. That is slightly up. Tesla 493. Look at that V, along with Bitcoin trying to go for a 90, dude. This thing was at 86.1 less than 10 minutes ago. That's a $3,115 candle. I mean, we've seen some candles over the past couple of weeks, but 3,000 in like 10 minutes. I don't think we've seen that in a minute. Tesla just made a V. Tesla gets to 495. It'll complete the V. BMNR just went positive. Iren's still down. Nebby still down. Nvidia still down. Google still down. S&P still down. That's weird, dude. Bitcoin pumping and every other major tech name besides Tesla flat. That is weird. Biotech's XBI, that's the biotech ETF. That's also up 0.5%. That's running a little bit as well. IWM. Small caps pumping and Bitcoin pumping. As a result, Hood's pumping. But the S&P is red. Jane Street's right on time. That's weird, dude. I don't think we've seen a day like this where, I mean, usually the NASDAQ follows, or Bitcoin follows with the NASDAQ. Not today. They are completely going the opposite right here. The Qs are red. The Qs are red as Bitcoin is attempting 90 right here. Cruise lines, these guys continue to be in rotation. That's up another 3%. These consumer plays that are supposed to signal weakness in the consumer are getting bid up, whether it's Dollar Tree, Five Below, freaking American Eagle, the cruise lines, they are just getting bid up. American Eagle up another 0.15. How about Oracle? Wow, Oracle, 4 cents away from losing 180. She got to 180.04, now up to 180.26. We're going to have to see how Oracle ends up playing out. GOP news. So the healthcare bill will be voted on today. That's going to be important. They're not going to be voting on ACA subsidies. One of the representatives has signed the House Democrats' discharge position, which exempts to force a vote on a 3-year extension of ACA subsidies. The position is now just one vote short of forcing the House vote on a. Oh, wow. They are trying to force a vote on the extensions today. Representatives began a petition to force a vote on the ACA subsidies, which again, Mike Johnson said they're not going to be doing today. Where's Oscar? Oscar still down 2%. Oh yeah, Trump is making an announcement at 9 p.m. today from the White House. I guess I'll be live for that. I don't know what the announcement is going to be, but 9 p.m. he is making some announcement. But the subsidies might get a vote on today. They're trying to override Johnson with Republican support. Exactly. That's exactly what this is what they did with the Epstein files as well, which, by the way, have not come out yet. And you got a lot of people thinking that it might come out by end of year, but if it doesn't, then that's something also that people are waiting for. Oracle right there, 180.5, IWM 251.61 on the day. Paramount affirms commitment to $30 a share offer for Warner Brothers. Dude, she doesn't like you. Like, it's okay. Like, these guys keep trying to buy this company. Like, she obviously doesn't want to be sold to you. They don't want you. They want Netflix. Also, Jared Kushner's out of the deal. He took his money out of the deal. So Jared Kushner's like, yeah, I'm not going to be in this dumpster fire anymore. They need to just give it up, bro. They're not getting it. They need to worry about Larry Ellison's net worth that is dropping by like, what, $10 billion in the past 5 minutes? Like, they need to worry about their debt. Oracle and the Ellisons need to worry about their debt more than they need to worry about controlling Harry Potter. This is becoming ridiculous at this point. Netflix right there, 97. That is up 3% on the day. Tesla, can we get to 495? ETH still over 3,000. Wow, Bitcoin, she's still trying. She's really trying. Tesla 490. She's helping Hood right there, 122. Oh, by the way, Coinbase is making some announcement today at an event. And I was talking to Tanner last night. Apparently, they're announcing tokenized stocks and prediction markets. I think that's great for Coinbase, but I ultimately think it's a nothing burger right now. Coinbase has to prove that people actually want to buy tokenized stocks on their platform, and they have to prove that people will use prediction markets on their platform. And if we're being honest, the majority of prediction markets right now is sports betting. Are people really going to sports bet on Coinbase? maybe some people, but Robinhood has proved that they do it on Hood. Kalshi and Polymarket have proved they do it on those platforms. Coinbase can introduce it, but that doesn't mean that it's going to be adopted. So I don't know if Coinbase is a buy simply because of this pivot. Like long-term, sure, this is bullish. Short-term, I think it's a nothing burger. Like I don't think tokenized stocks are changing the company outlook right now. I think quite literally it's tied to Bitcoin. I mean, they could do whatever they want. At the end of the day, this is a Bitcoin exchange that is, I mean, if Hood is tied to Bitcoin in an intimate way and it's not even like the biggest part of their business, Coinbase is explicitly tied to Bitcoin, given their diversification is much less than Hood. Also, you have to ask yourself, even if they put out tokenized stocks across the world, I know they operate in more countries than Hood, how many people are actually going to start buying it on Coinbase? Like how many people are going to start trading tokenized shares on Coinbase in a way that meaningfully gives them volume and revenue? Like that's the bigger question. I don't see that happening anytime soon, especially in a lot of these countries where the disposable income is not even that vast to trade these stocks. So the feature is good long-term. Is it going to make an impact tomorrow? I don't think so. But it should be a big thing for them to do long-term to diversify the business. Yeah, Kraken is also already doing this already. I mean, there's just a lot of competition in this space. So they've got to win distribution before I think you see an upside to revenue. S&P 679, Google still defending 300, and NVIDIA 174.36. Do you think Bitcoin is pumping to pre-run the CPI beat tomorrow? That's a good point. Wow, 90K. There she goes. 90K. I mean, maybe. I don't know. Let me try to find the CPI expectations. From a few articles I read on Monday, CPI should be way better than expected. Or at least, even if it's not way better, it definitely shouldn't like be hot. And so Bank of America says they're expecting, they're expecting 0.23%. They're expecting it to be slightly stronger, but not some crazy number that would be super scary to the markets. If we get a really hot CPI, the problem is everyone's going to say the rate cut was unwarranted. So we kind of need a good CPI to not get the market to be super scared about CPI. Yeah, I mean, maybe Bitcoin's front running that, or maybe Bitcoin's just being Bitcoin. But I feel like you would see the entire market front run that, and you're not seeing that. Not with the S&P 500 and the Qs down. 90,143 on Bitcoin. The Japanese interest rate hike, again, this is my opinion. I could be dead wrong on this. That's going to happen on Friday. I really do think it's priced in because we all know about it. Like, it's not a surprise. We know they're hiking the rates. Once they do it, it's going to be like, okay, cool, they did it. Maybe yields will still spike for a second. Maybe that'll have some impact on Friday. But if you are someone who's trying to get out of your short yen position, why the hell would you not do it before the Japanese hike rates? Especially if you know there's a high probability, unless you're betting on the 1% they don't hike rates, which, by the way, is pure upside. If they don't hike rates, we moon. If they do hike rates, okay, the people that were going to hedge and cover their position, they've already probably done it. Like, the responsible thing to do if you're over levered on the yen carry trade and you know there's a Japanese rate hike meeting coming up where the odds are 90% against you, you cover before it happens. In August in 2024, no one knew. That was the difference. That's why we woke up with the S&P 500 down 10%. It was like an actual shock to the system, which, by the way, recovered in like 5 hours. So I'm not sure that's going to be something that is the biggest deal on Friday, but then again, it could be as well. Netflix right there, 97, Tesla 492, American Eagle up another 1%, Hoodie 123, and Bitcoin still holding 90K. Dutch Bros, are we up on the bros? We are up on the bros, 4%. Let's check out the stock draft, see how we're doing there. But Dutch Bros getting a move. I do have Tesla in this draft, so that's been helping. I'm at 26%. Tesla, we are now up 50% on. Matt's up 24.4. Tanner's up 16. Steve is down 0.37. And then Chris is up 4.5. So that's the update on the stock draft. Dutch Bros now up 4% on the day. Google is working on Torch TPU to make its AI TPUs fully PyTorch friendly, aiming to chip away at NVIDIA's CUDA moat. Dude, Sundar doesn't care. Sundar wants the whole market. Sundar, he wants to go against CUDA now. I mean, look, it's smart for them to do that. They absolutely should be doing that. I don't know if they can easily penetrate the CUDA mode, because that is at least the engineers that I talked about at that Palantir event from NVIDIA as well. CUDA is a big deal, dude. I have not done as much research into it, but my goodness, they've been developing this thing for 15 years. And pretty much every developer that builds on GPUs is integrated into that ecosystem. But it makes sense. If Google's going to have more developers build on TPUs, then they do need to build a software offering that's similar to CUDA. Broadcom right there, that's down 2%. Ethereum still above 3,000. CoreWeave still getting hit. Oracle, did we lose 180? We did. We lost 180. 179.59, 5% down on Oracle. It's barely holding 180. And then Broadcom, she didn't lose 330 yet, but she's at 333. Netflix signs a deal with FIFA. FIFA arrives on Netflix games in time for FIFA World Cup 2026. Dude, Netflix is signing some deals. Podcaster deal yesterday. FIFA games today. Paramount just put out a statement. They said Warner Brothers seeks to mislead its shareholders into believing this is a complicated question about legal documents. We are fully confident that we have an offer to deliver shareholders with superior value and a faster, more certain path to completion. Yeah, they're getting desperate at this point. Like, they're getting fully desperate. By the way, you know the funniest thing about this thing? Trump, he gave another quote yesterday in a press conference. Again, he was annoyed that they put Marjorie Taylor Greene on 60 Minutes, which is owned by CBS, which is owned by Paramount. And he was pissed off about it. So they're talking about, oh, well, we have a superior path to faster completion of this deal. It's like, not when you put Trump's mortal enemy in front of millions of people to talk shit about him. Like, no, if you're gonna cozy up with Trump, I don't know who made that decision. That was a dumb thing to do. So they're acting like they can just easily get this done. It's like, Trump doesn't like you either. He's not a fan of you. So I feel like this is Netflix's deal to get. This should be Netflix's deal to get. Oracle 180. NVIDIA, are we still down? NVIDIA lows of the day, 173.80. 173.80 right here. Yeah, I mean, look, the people can say MTJ is not anti-Trump. The problem is Trump perceives her as anti-Trump. And if Larry Ellison wants to be calling Trump on a weekend, telling him to get a deal done, it's an awkward conversation when you have the editorial choice of putting someone in front of millions of people that Trump perceives as against them. So it's funny because they're trying to use their like close relationship as a reason they can get the deal done. But then they're also doing stuff that the guy you have a close relationship, aka the president, doesn't like. So it's like their argument is not even that convincing. Necessarily carrying through on the way they want to frame this argument. Here's some more coverage on this Warner Bros. Stuff as we're getting more details on this.
A lot of explanation in terms of what gave it pause and what gave its board of directors pause as it considered Paramount's offer. Much of that coming back to the equity financing and the lack of guarantee, at least on the part of at least Warner Brothers and its advisors, they felt, from Larry Ellison and those who were behind that equity, $40+ billion that would help finance Paramount's bid for the company. I did speak earlier to Sam DiPiazza. He is the chairman of Warner Brothers, and he explained what was lacking.
When Paramount showed up, it became an active process. What is said on your show, you had David Ellison here, what's said there, what's said in the Wall Street Journal are nice to hear. What's important is what's on the paper. And now I think, given our release this morning, our investors can look and see, why did we decide that we were not confident that one of the richest people in the world would be there at closing? And doing a deal is great. Closing a deal is better.
To this, coming back to the revocable trust, of course, the Ellison family trust, and their contention on the part of Warner Brothers that ultimately that trust could be emptied of its assets if in fact they wanted to, and they would have nowhere to go to get the money to close or to.
So they're concerned about the money. Again, we've been talking about this for the past couple of days. They're concerned about if the money is going to be there. And they know with Netflix, the money is going to be there. Hood really getting a move right here. Wow, 124. Obviously, Bitcoin is definitely helping it. The event last night was also very bullish for Hoodie. Bitcoin right there, 90.2. 90.2 on the day. If that can actually get a meaningful breakout and hold above 90, then Coinbase, Hood, MicroStrategy, all those guys are going to love it. MicroStrategy right there, 169.65. Warner Brothers, that one's still down. Tesla 491, and then Netflix 97. Still trying to get back up to that that $100 level. Figma's also up 4%. Yep, Figma's up 4% as well. 37.35. That's up 4%. There you go. Hood right back above over 124. Trump wants Paramount to control CNN. That's why well, okay, so that's a fair point. Trump, like, even if he's annoyed about the CBS 60 Minutes thing, Paramount controlling CNN, which would be kind of crazy, dude, because, I mean, CNN's never been controlled by someone like a Larry Ellison, who, you know, one could argue is changing CBS for a variety of reasons. They hired Barry Weiss. I mean, there's a lot of different things going on. So if they were to take control of CNN, I mean, I don't know if Jake Tapper and Anderson Cooper and these people still have a job there. I mean, you might just have a fully shakeup, which Trump would love. But it's also a question of, like, does Trump actually think they're going to do that? And given how they've acted in the past couple of weeks, he might have some doubts about that. Google below 300. So I think if I had to bet, I think it's Netflix. Netflix gets the deal done. They're worried about the financing. And then eventually, look, even if this takes a couple of years, unless there is an explicit violation of antitrust, it's going to get approved. It might take some time. It might be an overhang on the stock, but it should be able to get approved. Reddit right there, 231. Reddit as well, up 3% on the day. Do you think the rally starts this year sooner because people want to front run the expected 2026 rally? I don't think we even fully can confirm that there is an expected 2026 rally to happen yet. Every analyst is coming out with a 10% target. That's not a massive rally. Now, that's massive over the past 3 years that we've had 20%. But they're calling for a basic year. I mean, every analyst, I heard an RBC this morning, they said 77.50. They're calling for a basic year on the S&P. Maybe it's up 2% more than expected. On average, it goes up, 8%? So they're calling for 10%. So I don't think 2026 is a year of a rally. I think 2026 is a year of a continuing bull market rally. The 10% compounded over the past 3 years makes it look really good. 10% in and of itself is not like some phenomenal year. So I wouldn't say people are front running anything yet. I would say people are trying to see if fighting the Fed and going against the AI trade makes sense. And every time these stocks dip strong enough, you get people realizing that the Fed is going to cut rates and that AI is real. And that's why they continue to enjoy buying the dip on these names. Yeah, 2026 could be digestion and growth. And if we get a 10% S&P 500 year with digestion, that's a great year. Because, you know, we are 4 years into this AI cycle at this point. So unless we have a big breakthrough next year, like, could there be some type of technological breakthrough in AI that is so transformative? With, by the way, Optimus is that idea. Robotics is that idea. Full unsupervised FSD could be that breakthrough. I just don't know if 2026 we get it. But if you have a year like that, where it just fundamentally changes the unit economics on so many businesses, like ChatGPT did in 2023, I mean, that's a big deal. But we might not easily get that next year. 77.40 is not 10%. Well, it is 10% from their current targets. Because remember, you're assuming it's from 6,800, but every analyst has 7,000 for the end of the year. So if they're right on if they're wrong on 2025, then it's more upside. But if they're right on 2025, it's going to end up being around that 10 to 11% range, which they've got 2 weeks to be right about. I mean, pretty much every analyst over the past couple of months has re-rated to 7,000. They started at 65, then 67, then they went down to like 5,000 on Liberation Day. And a lot of them came back over the past couple of months to 7,000. So we have to see if they can end up getting that 7,000. Bitcoin just below that 90,000 level. Did NVIDIA just go green? No, Nvidia's still red, still down 2%. Google did lose 300. EOSE got upgraded to 16 bucks today. I know a lot of people like that one. That's down 2%. And MicroStrategy is up 2%. What is the CPI target for tomorrow? I don't have the exact targets yet. I'm assuming it's around 2.8. We'll get the exact targets in a bit, but it should be 2.8. And if we come in at 2.9, that should be okay. If we come in at 3%, that's not going to be the best, but we're coming around 2.8. It shouldn't be horrible. By the way, Vlad's going to be on CNBC in a bit, so we'll get over to him once he's live. Here's some coverage of the potential new Fed chair as well.
Kevin Hassett is still the favorite here, 55%, 50 something percent odds or so, 54. And then Chris Waller and Kevin Warsh are sort of around 20%. Again, this is just the betting markets. They don't know much, but going on some of these words of rumors of who's at the White House, who's doing the meetings. We know the president himself has mentioned both Kevins being front runners. You know, Chris Waller, the Fed governor, did speak this morning to Steve about his views on monetary policy. So, you know, since he is going to be talking to the president about it, one of the key questions right now to sort of gauge whether you're a hawk or a dove or how many cuts you might want is where he thinks neutral is. And that's something Steve asked him. Listen.
I still think we're probably, maybe we're 50 to 100 basis points off of neutral. We still got some room we could bring things down.
Neutral is the level of the Fed policy rate that doesn't hurt the economy and doesn't help the economy. It's sort of the baseline of where they're trying to get to. And when he suggests we still have another 50 to 100 basis points to go, that means that he's suggesting that there's more cuts to go. And then we sort of went back and looked at some of his old speeches. The last speech was November 17th to sort of signal whether he wants more cuts ahead. He was very dovish in that speech. Did say that he was more concerned about the labor market, the K-shaped economy, and not so much inflation. Here was the money quote, I thought, Carl. With the evidence of slowing economic growth and the prospect of only modest wage increases from the weak labor market, I don't see any factors that would cause an acceleration of inflation, i.e., he's probably not a holder and definitely not hawkish at all. And that's going to go down well, probably, with the president.
And that's why he is now at a 15% chance of potentially being on the list for becoming the Fed chair. Here's Vlad, just went live on CNBC as well.
Now, and first on CNBC is the company CEO, Vlad Tena. Vlad, always good to have you. Why are you doing this?
Yeah, so last night we dramatically expanded our prediction markets offering in a couple of ways. One of the things is just making them available for people that aren't just interested in trading, but also want to see the information. And we talked about how a year ago we had one prediction market on the site and it's grown to thousands. We think we're in the early stages of a prediction market super cycle where the amount and volumes traded in this new asset class are going to grow tremendously. And we're increasingly seeing them used not just as a tool for traders to speculate, but also as a new source of information. Let me give you an example. Your previous segment, you were talking about the Warner Brothers merger with Paramount and Netflix. Now, I think that the question on everyone's mind with something like that is, what's the likely outcome? Who, if anyone, will end up acquiring Warner Brothers? And we have a prediction market on Robinhood that answers and addresses this exact question. The interesting thing is, last night, if you look back 24 hours ago, we had on our market Paramount with 55% chance. And now I just checked while I was watching your segment, 75% chance. And I think we can try to decipher this by looking at the various stock prices of the companies, as you guys have shown. But really, prediction markets, I think, are ultimately going to be most valuable as a better forecasting tool, where you don't have to worry about modeling out the exogenous effects of all sorts of factors on a company's stock price. And you can actually get the direct answer to a very specific event. And I think that's just one of the reasons why we're in the early stages of a super cycle in this new asset class, and why Robinhood is continuing to push forward with the best products for traders and for people using it as a source of news and information.
Vlad, you're absolutely right in that it's getting used a lot. I mean, it's showing up in sell-side analyst reports. Everyone's sort of coming to it as a new source of information. But I wonder what you think the actual predictive powers of these markets are. I mean, we've all seen a chart of, I mean, my favorite is, will Beyonce show up at the Super Bowl? And odds are low. And then 2 seconds before she comes on stage, it goes to 95, 99%. Who has an edge on these things?
I mean, I think that there's such a wide variety of prediction markets. And of course, you can probably come up with examples that might look silly to pretty much anyone. But I think the power of it is we can get a real-time exchange-traded price and forecast on pretty much anything. And what we found is talking about traders, what this allows traders to do is hyper-specialize on one specific thing. So, you know, there's probably one area where each of us is sort of a unique expert, be it AI technology, gaming, music, entertainment. And this allows you to actually trade and specialize. And while you're trading, you produce this valuable forecast. So, I mean, we talk to customers all the time. Some of them are very, very scientific about these things, and they just collect all the information. They study it deeply, and they feel like they have the tools and the knowledge to go against conventional wisdom and trade on the things where they may have a unique edge.
Do you worry about the line being blurred, though, between gambling and trading? And the fact that we're in a pretty relaxed regulatory environment right now, and I guess the CFTC is in charge of regulating these prediction markets, but they have been really thinned out. And some critics say, you know, there's not a lot that you can do to protect against, say, insider trading and that sort of thing.
Yeah, I think a lot of times the sort of discussion about, you know, gambling versus trading ends up in almost like a debate over the meanings of words. I think the main critical difference with prediction markets is that these trades are happening on a CFTC regulated exchange where there's a market between buyers and sellers. And I think what we're seeing now is that this infrastructure is so powerful and generalizable that, you know, one of the many things it allows is a pretty effective experience to speculate on sports and all kinds of events. If you look at any derivatives market, speculation is a big part of it. You can't just have people arbitraging or hedging, because without the speculators who are actually predicting what the fair value and the prices of these contracts should be, it's not an effective hedge. So I think that the criticism has been levied on pretty much any derivatives market through history. You know, when we first started trading futures markets, I think there was a big debate on whether retail should be allowed to participate, whether this was too speculative. But I think in the fullness of time, you've seen that, you know, these markets have provided substantial value to all kinds of participants. Yeah. And, you know, just like the futures markets and crypto to a certain extent, you're likely to see retail activity come in before the asset class becomes institutionalized. But we do anticipate that. I mean, you look at how many trillions of dollars are being purchased by large institutions for doing things like hedging interest rate risk. And I think prediction markets are a better mousetrap for some of that activity. So you should expect it to grow tremendously.
Vlad, we're running out of time. You're quoted in the press release as saying this will usher in a new era in which AI and prediction markets will come together to change the future of finance and news. So what is AI going to do here? And obviously, I care a lot about finance and news, so I'm curious as to how you see things changing.
Yeah, I mean, I think the bigger story behind last night's event was it's a shift in what Robinhood is becoming, and we're giving people a glimpse into the future, because for a long time, Robinhood has been a tool that customers use to execute the trade. But now we're sort of going up funnel and giving customers tools to actually generate the idea and the inspiration behind the trade. So they can do their research, they can gather information, perform sophisticated analysis all on Robinhood, and then use that to execute the trade. And there's 3 tools that we have that we've either recently announced or are scaling that are converging to accelerate this trend. One is prediction markets. The other is Robinhood Social. And the third is Robinhood Cortex, which is our in-house financial intelligence. And I think one other thing to mention, we recently announced a joint venture with Susquehanna to acquire LedgerX, which was a derivatives exchange. So over the long term, you should actually see Robinhood as an increasingly large player in the institutional market. We would like to do our part to help accelerate institutional adoption of all of these trends in this asset class. And I think that, we should expect it to get bigger.
Isn't it getting a little competitive, though? I mean, you've got Kalshi, which CNBC does have a partnership with at this point, Polymarket, now Fanatics and Crypto.com are in it, and DraftKings, and they would argue that most of the predictions markets is sports betting, so they actually have is sports predictions, so they actually have the advantage. How does the competitive environment look to you, and where's your edge?
Yeah, I mean, I think that the sports books definitely see the writing on the wall and how this could completely disrupt their businesses. And that's why they're all scrambling to figure out their prediction market strategy. And we should expect that with any growing market in its relatively early stages, it's going to get competitive. We certainly saw that with crypto. And I think the unique advantage Robinhood has is, first of all, we're pretty early to the market. We launched with the presidential election last year, and now you're kind of seeing us go to V2 and V3 and really start to iterate and learn from customer feedback. But also, right now, we're the only platform at scale that offers all of these assets for traders in one place. So we not only have prediction markets, but we have stocks, options, crypto. We've got futures. Overseas, we've got tokenization and perpetual futures. And I think when we talk to traders, having the ability to have all of these assets together in one place is a really powerful combination. And they tell us they feel like they're at a disadvantage using other platforms, which is exactly what we're trying to build towards.
Vlad, appreciate you taking time. See you again soon.
Always a pleasure.
All right, that was Vlad. Robinhood hitting that 124 level, but super, again, volatile. It hit 124.50, now back to 123. That's up 3% of the day. Bitcoin just down from 90 to 89.9, but doing a good job at least holding those high 90,000 levels. And then Tesla right here continues to lose its momentum. 489 still is amazing, but it's just not breaking through that 495 level. Lemonade's up 1.5%, S&P 500. Still red on the day. While he was talking, I bought some Grab at 490. I mean, could this thing dump all the way to 450, which is when I initially started buying it earlier this year? Maybe, but I did buy the dip at 490. And we'll see if this one has to head lower. In terms of what Vlad was saying, I mean, look, this is going to be a battle they have to fight from a media perception for a long time. Like, they are now going to be assumed to be a gambling company. It is what it is, no matter how much they want to say it's a trade or a bet and not a gamble. But I think they just have to continue to build products that they're building. They're going to get a lot of people that are turned off by it. It is what it is. And there's going to be other people that like that they're issuing new products. So I think from that perspective, as long as it continues to grow effectively and has a lot of different use cases, it's not going to matter. But that is now a new perception. And you know, they have to embrace it. At the end of the day, Robinhood's not going to be for everybody. Disruptive innovation tends to piss off a lot of people because you enter into some gray areas, and this gray area might make them $1 billion in a couple of years. But they are indeed leaning into that. 658 on Meta. That's down about 0.25%. Microsoft at 477. That's flat on the day. And then Apple 275 is also flat. Do you think the new management of GoTo gets Grab the merger? In fact, I think that's why I bought today. I mean, like, yes, the new management of GoTo explicitly should lead to the pathway for a merger. Again, we also have to remember they raised almost $2 billion earlier this year. Why? They haven't really used any of it outside of some strategic investments in some autonomous vehicle companies. So I think the real reason is because they need to put up $2 billion to buy out their biggest competitor, which would, dramatically increase their growth rates upwards of 30 to 40%. So they needed the money. these acquisitions just they take a long time, especially with all the regulatory hurdles inside of that region. So yeah, SoftBank's a major shareholder of both companies. I don't think Mas Hassan wants these two companies to compete anymore. And the new CEO makes it very likely, in my opinion, that they end up acquiring them. And that could reshape the entire dynamics of the region in general. 43.30 on Hut 8 Mining. That's up 17%. S&P 500 lows of the day at 677. Down about 0.15%. Yeah, Hood's also in it. Well, no, Hood and Grab are not going to compete in Indonesia. Grab used to have an invest business. They shut it down 2 years ago. So Grab, I really doubt is going to compete with Hood in investing because they tried and it didn't work, which goes to show how hard it is to make investing work. So Hood acquired a brokerage and they're entering Indonesia, but they got to make it work. Like, it's not easy. And Grab tried a couple years ago. It just didn't work. So I think they're actually going to be more synergistic with each other than necessarily competitors. Medline's going public today. That's going to be a big one. Medline, is anyone interested in that IPO? I mean, it's going to be $5 billion. It's one of the bigger IPOs for this space. MDLN will be the ticker. Is it already public? No, $30. Okay, so it'll be listed today. $30 is the price. Robinhood didn't even ask me if I could get a piece of it, so I guess they're not giving much to retail here. But that'll be the last IPO for the year, most likely. Nebius under 78. There you go, down 4%. Who would have thought the last freaking couple months of the year was going to be this shit? Like, wow, S&P, new lows for the day. We were so spoiled in the summer after Liberation Day. I mean, I remember during Liberation Day, it just felt like, all right, I guess this is an accumulation year. All those hopes of back-to-back years of, really growing the portfolio, that's dead. And then it V-shaped. And then we had so much momentum. Nothing, the Iran-Israel stuff, freaking Moody's downgrading our debt, Trump threatening 50% tariffs on Europe. Like, every bad headline, the market didn't even scoff at it. And now, Oracle data center delay, boom, down 10%. It's like, okay, I guess we have a different mood swing on how we think about this. It all went to shit after your birthday. Yeah, after I turned 28, the market was like, hey, you want to know what it feels like to be an adult? It's time to give you some real pain. Boom. November volatility right after that. Realistically, though, it wasn't after my birthday. It was October 9th. That's when most portfolios, I mean, you guys can check right now, but I told you guys this, I think, last week. My high, October 9th. October 9th, your boy was on Zillow. And your boy was just scrolling the options on October 9th. On October 9th, if I go through my search history, I think I'll find some Zillow. Because what else do you do on a day of all-time highs like that? You go to Zillow. And you're like, you know what? I wonder how much a condo in Turks and Caicos. I wonder how much does an island cost, How much does a Manhattan apartment overlooking Central Park? How much does that cost? Your beard caused it, according to the information. Oh my gosh. And then October 10th, we got the stupid soybean tweet. Google below 300. And then after that soybean tweet, it was over, bro. After that soybean tweet, it was legitimately over. Because then you had the freaking crypto deleverage. And once crypto falls, I mean, everything that's high beta fell with it. Oklo was at 198. I mean, and the crazy thing is that week, I remember that week when the meme stock ETF came back, and all of us kind of knew it was toppy. It wasn't toppy enough to be like, leave the market, but it definitely was toppy enough to be like, maybe trim some parts of the market. And if you trimmed there, you ended up doing okay. By the way, Ray Dalio is joining Michael Dell in backing the Trump accounts. Ray Dalio, how much money is he? So Michael Dell put in $6.25 billion. I don't think we have a number yet. Block, Uber, BNY, Charter, BlackRock, MasterCard, and Visa are also joining Ray Dalio. We don't have an exact number. However, I mean, it makes sense for these companies to do it. A, it's great PR. B, it's a full-on tax write-off. So, I mean, why wouldn't they? And they get all the PR of helping the kids. So I think a lot more companies will join this. And ultimately, hopefully the next generation of the youth will benefit from it. I mean, look, you need someone to be exit liquidity when you're 70. So realistically, I think all these CEOs are just making sure these kids are friendly enough with capitalism so they're willing to buy Microsoft at $5,000 a share when someone at 85 is ready to dump it on them. Someone has to buy it. So we need to make sure we prop up exit liquidity in this country for when we all retire. I mean, I'm probably exit liquidity for a bunch of older people at 28 when I start buying the S&P, which I will start buying more aggressively next year and just start to do the whole DCA into the S&P thing. Someone who's like in their 80s is dumping it on me, and I've got to hope that the S&P has more upside by the time I get to 80. But yeah, that October 10th tariff tweet completely hurt the bull market. Even though the China stuff, the soybean shit was resolved on Sunday. Like it was an issue on Friday, resolved on Sunday. But the amount of people that got liquidated, $20 billion of crypto got liquidated the day later. Which is crazy. My grandson is 18 months old and missed out on all the free money. Yeah, they only do it retroactively to 12 months, right? So yeah, if you were born more than 12 months ago. Wow, Broadcom. She lost 330, 327, and falling. Oracle's got to be below 180. Oracle, there you go, 178. What grab spreads do you have? I still have 7.5 and $10 spreads. I'm holding on to those. I have a year left on those. The good thing about leaps is that you have some time. I am not giving up on those. I do not think grab deserves to be at this level. I'm definitely not selling those for a loss at this level. I'm going to give it at least another 6 months. And at that point, if it's a loss, it's a loss. But 750 is what I need for those to get profitable. And we're going to see. Again, every price target on this stock, every valuation model I look at, this thing does not deserve to be here. If we do get to 750, though, this is the pain you have to go through to get there. Or if you get to $10, like same thing with the Hood and Palantir when that thing was stuck at 6, 7. Same thing for all the people on SoFi that were stuck at $5, $6 while seeing the rest of the market go up in 2024. Like you're the one who deserves the gains if you deal with the nonsense of the stock not reacting to the earnings progress, and that's the reality of being an investor. Sometimes it takes time, but a lot of good things in life tend to take time to ultimately play out. Of course, I said 6, 7 again. Of course I did. 326 on Broadcom, still down 4.3%. My goodness. My goodness. What's the reason though? Why? I mean, is it really the Openai headline with Amazon or the Oracle delay on data center? Or is it more so, I hate to use this word, but it was the word of Monday that I think we all kind of understood, just exhaustion. Wow, NVIDIA 172. Like, is the market straight up just exhausted of AI? And that's why NVIDIA, which I don't know how this multiple deserves to be at this level, is getting hit today. I mean, Blue Owl can't be the canary in the coal mine that causes this. You can't say it's lack of liquidity. Blackstone stepped in and took over the Blue Owl deal. So it's like, it's not like Oracle can't find any financing. They found it. It's Blackstone. It's a pretty big institution that can give them the money. So, wow, Tesla 484. Hood's about to go red. I mean, it got to 124, but I don't know if it can hold up even that 2% today if we are seeing red across the board. NVIDIA 172.40. Did Michael Burry tweet something today? Let's see. Yeah, I don't think it's a massive headline unless it's that freaking Blue Owl headline. Michael Burry says household stock wealth being higher than real estate wealth has only happened in the late 60s and late 90s, the last 2 times before a bear market. This actually is an interesting stat. I mean, you can't ignore some of these historical correlations. So he's saying the last time U.S. household stock wealth has been higherly concentrated than real estate wealth, equities essentially as a percentage of net worth, was in 65 and 99. And then you had 2 bear markets after that. We are definitely well above real estate as a percentage of net worth per U.S. household versus the stock market. I think it's like significant. There was a chart I showed last week on this, but it's like significantly higher. It's kind of this whole thesis of people saying, I don't feel like buying a house, but I'll buy more NVIDIA. I don't think that's the reason we're down right now, but that is a stat that I think is relevant here. Broadcom 325, that one keeps falling. Tesla keeps falling. This is why I was talking about hedging this morning. This is why I spent like an hour talking about this with Jason last night. If you are super, super overweight in a stock, for me, that's obviously Robinhood. For a lot of people, that could be Rocket Lab, whatever it is. And you don't want to sell the shares. Because at the end of the day, there's 2 ways to hedge. There's 3 ways. You buy puts, you sell the stock, and you get into cash. Or you sell some in-the-money calls. And, as we were talking about it last night, the in-the-money calls to me made the most sense because you're protected delta neutral to a certain level. And as long as you're right about that level, AKA, I think, for example, if I get $40 of premium, Hood's at 120, 80 is my downside. If it goes below 80, then all right, whatever. But if I think 80 is the most of my downside, I'm protected there. And yes, I miss out on the upside, but then again, I don't have to deal with the catastrophe of seeing my portfolio get nuked if this thing drops $40, or if Rocket Lab drops $30, or if Tesla drops back to 400. Like, that's just tough to deal with, especially if you've done the hard work of buying the stock when it was cheap. And I think the biggest thing Jason was talking about yesterday is like a lot of us, at least I'll speak for myself, I was broke 3 years ago and I'm not broke anymore. And I think a lot of us are in that position where it's like it's about preserving the wealth more so than just chasing it. And sometimes to preserve it, you got to take a risk. You got to buy when Trump is saying he's going to tear up the whole world, which all of us did this year. Again, we've continued to take a lot of risks. Sometimes you also got to be like, all right, let me protect what I have. And it is not crazy on a certain percentage of a stock you are massively overweight to, especially if that stock is super high beta, ridiculously volatile. To go through those swings the next year again, I don't know. I personally don't want to deal with that shit. How is it hard work? It's very hard to find stocks that are, if you were stuck with SoFi for 3 years at $7 and you built a massive position, which I know a lot of you did, and a lot of you guys bought a lot of options on this thing at $10. This thing's at 26, right? Deep in the money. Like, you did the hard work of studying, believing in the company, keeping up with the news, holding when it got tough, and you deserve to protect those gains. I think it's just a part of maturing as an investor. If you generated significant wealth off something super high beta, if you're in something that's not high beta, like a Home Depot, I mean, you don't really need to hedge anything. Like, it's not going to be that volatile and you don't need to worry about it. But if you're in something that took years to build a position on when no one cared about it, and now it's 10x on you, I mean, protecting that is very important. The other reason that's also really important is because, dude, we just don't know what's going to happen in 2026. And again, let me clarify my view. I think there's 2 things you cannot fight. The AI trade that's increasing earnings, which there's a lot of different nuance to data centers and financing and debt and all this stuff. And all those things are idiosyncratic to the broader idea of AI increasing earnings, which is what the market will ultimately give it multiple to on those earnings. That's the first thing you don't fight. And then the second thing you don't fight is the Fed. That's going to be easing. Those are why you stay bullish. But that does not mean in the middle of that, you don't have some incredibly volatile moves that you just might not want to deal with in the short term if you've already done the hard work of buying these stocks cheap. And so, I think there's 3 ways to hedge next year. You take some off the top, you buy some puts, or you sell these in-the-money calls. And quite frankly, selling the in-the-money calls to me is the best of both worlds, because if the shares get called away, it is what it is. But if they don't, and you actually do get some volatility, you can buy them back cheaper and keep your shares. You have to be okay with them going away, but get the premium today. You avoid the tax liability until they get called away, and you're protected for 30, 40% drawdowns, which is what a lot of these high beta stocks will experience if the S&P drops 10%. And it's not just Tom Lee, by the way, calling for a 20% decline. It's every analyst. Now, Tom Lee is specific in calling for 20%. SMCI right there down 3%. But I was listening to RBC this morning, Citigroup yesterday, JP Morgan the other, I think on Monday. They all said they're expecting 10 to 15. So Tom went to 20. He thinks it's going to be similar to Liberation Day. But the other analysts are expecting at least 10 to 15 at some point in the year. If that happens, the high beta names are falling 30 to 40%. It is inevitable. It is not possible for the S&P to fall 10%. I mean, even when the S&P fell 5% in November, these high beta names fell 30 to 40%. So could you imagine a 20% drawdown or a 10% or a 7% drawdown? Now, the recovery could be super quick, which is what we've been used to over the past year. But the point is, especially if you're on leverage, you can't survive a 10%. I mean, people who are on leverage, maxing that out, cannot survive a 10% drawdown because their individual stocks will be down 30 to 40%. And then they have to sell into weakness. And then if we V-shape, they would have sold the bottom. Which is, that's just for your mental health, that's going to be tough to deal with if we get in that situation. So the point is, when we bring up this conversation of hedging, it's just now some people are at the stage of the portfolio where they don't need to hedge. They don't really care, which is me in 23, 24. Hedge. Who cares about a hedge? I don't watch Sonic. I'm not a hedgehog. I don't care about I care about growth. And that's what I leaned into. And it worked. But then when you get the growth, sometimes focusing on preserving it is not crazy. So that's the idea on hedging that I was thinking about. It's okay. You can type LOL in the chat. It's all right. I know it was funny. You don't have to hold back your LOLs. You can go ahead. LOL, LMAO, LMFAO, ROFL. It's okay. You're allowed to type that. Don't feel like you're going to be judged for laughing, because everyone's laughing. Everyone's laughing. Don't type L. You don't have to type the L. You forgot the O and the L as part of the L. Don't just leave out the O and the L on the L. Dude, I don't even know how I thought of that reference. I don't think I've ever watched Sonic the Hedgehog. The fact that came to me, that is just saying, that's pretty incredible. It's pretty incredible. You gotta respect it. It's okay to laugh. It's okay to laugh. Tesla 481. I need to leave because I have a dentist appointment, but the market is crashing. I'm getting a crown on my root canal today. I actually really don't want to leave early today because I want to see how this plays out, but I kind of have to go in at least 8 minutes. Goodness, dude. I don't see the headline, guys. I don't see anything very specific. If this is all Blue Owl, then I guess it's Blue Owl. Nvidia's down, Dutch Bros, Broadcom just continuing to get demolished today. I mean, again, S&P is not even down 1%, but this is my point, though, on this hedging coverage. S&P is not even down 1%, and these high beta names are down 5% already. This is my point. It's like, if you've got some significant wealth over the past couple of years, it is okay to think of protecting some of it. Because if we are to get any level of a meaningful decline, I mean, these stocks are going to get hit. It's inevitable. But these stocks also went up like crazy, even though the S&P is only up 14% for the year. These stocks are up 2 to 3x. So that level of delta is going to happen on the downside as much as it is on the upside. That doesn't mean get out of the market, but that does mean protect some portion of it. I think it's just not crazy to imagine. NVIDIA right there, 172. That one's down 3%. The VIX isn't spiking, right? The VIX is... Dude, what's going on? The VIX is up 1%, and we're seeing this type of pain. Again, it's not crazy pain. S&P is down 0.5%, but these individual names are getting hit. Tesla, 479. Where's Bitcoin? Oh, my goodness. Dude, while I was talking about that hedging thing, I didn't even realize Bitcoin was 90 to 87. Did that just happen in like the past 5 minutes and I didn't even see it? Oh, sorry. You guys are right. You guys are right. My thing was loading slow. No, you're right. VIX is up 5%. You're right. You're right. Okay, that's fair. VIX is up 5%. That makes more sense. I was like, how the hell is the VIX up 1%? And we're seeing this type of, okay, so VIX is up 5. So you got a little bit of a VIX spike, not double digits yet, but 87.6 on Bitcoin, just lost 90 literally within a couple minutes. That is wild, bro. Absolutely wild. I mean, maybe we're seeing VIX above 20 again. We haven't seen VIX above 20 in a minute. Maybe that's what we're going to get. Oh boy. All right. I guess this is what we're seeing today. The one and only JL, thank you for the super chat. Hey, admit to yourself, stops for the New York meetup. Yes, we have about 200 spots left. We have 300 in total. 100 people signed up over the past 2 days. So yes, we have 200 left. I'll put the link right there in the chat. I think we're going to cap it at 300, guys. I mean, we can probably support 350 at the most, but I think it's just going to get too much if it's more than 350. So, or more than 300. So yeah, I think we should be able to cap it at 300, but there are 200 spots left. Again, at the end of the day, I don't want it to be like some 1,000-person event, because then it's just not as intimate if you don't have, you know, a smaller amount of people there. In the future, one day, we'll do something where it's a lot bigger, but for the foreseeable future, we're going to try to cap these meetups at about 300 people. So yes, you can sign up. Link is in the chat. And I will hopefully see you there. Bitcoin right there, 87.6. Grab still down 1.6. Nebius down 5. Robinhood losing everything. There you go. Robinhood's 10 cents away from losing everything on the day. Nvidia just hit below 172. Netflix at 96.44. Oscars at 15. The Qs are down 1%. Okay, the Qs officially are down 1%. So tech's getting beat up, even though the SPY's not getting beat up yet. Below 670 would be not November 21st lows, but it would be creeping up close to that. Jess's email is jess@akcoms.com. Comms with 2 M's. jess@akcoms.com. I mean, didn't you have to leave? Yeah, but the market's tanking. Should I call my dentist? Be like, I can't make it? I'd be like, I'm staring at candlesticks go down. Someone just bought 1.4 million of puts on Google for 260 January 23rd. All right, the put buyers are coming in. 260. That's like Berkshire's. No, it's not their average, but it's like 10% above their average. 297 on the Googs. It's not that painful. I don't know why you guys think it's painful. I got a crown before. It's not that painful. Even the root canal wasn't painful. Watch it be painful now that I said it's not painful, but it's not supposed. I mean, people like it hurts. It didn't hurt last time, so I think it should be okay. Nvidia continues to decline. My goodness, dude, 171.44. Mid set to hedge, and everyone hedged. Look, I talked about it with Jason a lot last night. I really do think those in-the-money calls on a position you're massively overweight on is not a bad idea. And when I come out with the 2026 article on Substack, probably middle of next week, I mean, by then I'm probably going to have some hedges in. It just makes sense to me, especially when you're, again, 50% of my portfolio is NVIDIA, Hood, and Palantir, which has led to massive upside. But it could also lead to massive downside in cases of volatility. And at this point, I'm just getting to the point where I want to protect more of it than let it ride free. So I don't think it's crazy. But again, I don't think you get out of the markets. Like this SoFi down 2% is stupid today. Like this is dumb. It was at 27 this morning. Like this doesn't make sense to me on a fundamental basis unless we get a recession, which we don't see, given all the data we looked at, labor market, CPI, et cetera, jobless claims. Or the Fed doesn't ease, which we definitely don't see, whether it's Waller, Hassett, or Warsh, they're going to be easing. Or the AI trade is fake. If none of those three things are happening, if the AI trade isn't fake, if the Fed is going to be easing, and we're not getting a recession, these are just annoying moments of volatility, but I do not think they are indicative of a bear market. That is my thesis. That doesn't mean you can't hedge and protect yourself, because that volatility, you could have a 10% drawdown and still have a pretty bullish year. I mean, we had that. We had a 30% drawdown and still had a bullish year. 2024, we had a 10% drawdown and still had a bullish year. So the hedging, I think, is just a part of navigating the volatility. But I don't think that means you run for the hills and get out of the market. There's got to be something that really breaks to make that more evident to me, because the data is not making it evident. Now, if you think AI is fake, that's a whole different perspective. I don't think AI is fake, but I don't think that means it's a bear market. Okay, I really got to go, or else I'm going to be late for this. Thank you, everybody, for being here. Appreciate you all being here. I actually overstayed today, so we're going to do word of the day on the close. I got to get out of here. Sorry to leave early. We will see what happens on the close. Hopefully, this can get a bit of a reversal. Do we have earnings today? We have Micron today. So we'll discuss Micron, and then we'll keep going from there. I'll see if Steve can come on today. I think Steve took a day off today, either today or tomorrow. So maybe Steve will join the close, and we'll see what we got from Micron. Stream from your Tesla one day. Once FSD is like legit, I will stream from the Tesla. All right. Thank you, everybody. Appreciate it. I'll see you guys on the market close, and we'll see what happens with Micron. Thank you, everybody. See you guys in a bit.